Alrighty. What is going on, guys? I think we're all good here. Sound check looks okay. Let me let the group chat know that we are live. Let's let everyone know we're live. How's everyone doing tonight? All right, guys, let's do this. Okay. What's going on, everyone? Hope the market's treating you guys well. A little bit of rockiness to start this week. Decent rebound today to close almost flat. But listen, if you tuned into my last week's stream, you know that I was telling us we got to gear up for a little bit of volatility. That looks like that's what's the case right now. We got some volatility coming into the market. I think it's a little bit of jitters heading into the into the Jackson Hole speech from Powell on Friday, which right now I'm of the mindset the market's pricing a good bit of uncertainty around what he's going to say. So maybe on come Friday now there'll be a little less volatility. Turf, what's going on, man? No rate coming. It's very split right now. I think Fed futures odds are looking around 65%, if I'm not mistaken. Let's take a look here, see what the latest numbers are. Fed funds futures. Ruben, what's going on, man? Thank you, brother. I'm glad to be back as well. I hope we have no power outages or any issues this time around like we did last week. We were having a great stream. We're about an hour and change into the stream, just getting warmed up, and power went out. I don't know what happened. I do have some decently strong rain outside all day. Hopefully nothing happens, but we'll see. For any of you guys down in the southeast area, man, be careful with the storms rolling in. Look, I'm a fan of Rolls-Royce, man. I got to give them credit for their ability to turn a profit now. That wasn't the case a few years back. It's looking like right now 82% odds of a cut on September 17th. Ruben, I went and checked my my inventory, man. I just have a bunch of small hoodies left. Greta, how you doing tonight? Or I should say today, because you're about 6 hours ahead, right? So the sun's getting ready to rise. What are you even doing up at this hour, Greta? If I'm not mistaken, you're out in Greece? Unless maybe I'm mistaking you with someone else. Max, what's going on, bro? How's everything? Hope you guys are handling the volatility this week a little well. Oh, you're in Seattle? Then forgive me. There's someone else, I believe with your name, that tunes in often. She's from Greece. He tunes in all the time. I'm like, it's like 3 o'clock in the morning over there. But for you, it's the exact opposite. You're what, pushing what, 6 p.m. over there? So yeah, Turf, 82% odds we cut. Yesterday this was 87%. So right now likelihood of a cut is still extremely high. Now I have been moving heavier to cash. I just give you guys a little background on what I've been doing. Right now my cash weight, excluding bonds, I'm not going to exclude cash and cash equivalents. I'm not going to do anything like that. Pure cash is around 10-11% weight right now. That's what it was to start the year. I deployed the capital during the tariff drop, and I went down to 1 to 2% cash. I've now built that back up on this massive run. I'm now back to a 10-11%. My gut says by the time this September 17th Fed meeting rolls around, I'll be somewhere in the ballpark of 15% cash with the intention of buying dips. Now, I'm going to do it as I usually do it in slow stages. The reasoning and the rationale here is because, one, I do believe to an extent we are pricing in a good amount of rate cuts, okay? You even have a few banks out there saying 3 cuts coming this year with another one in January, all right? With some people calling for a target around 3% by this time next year from the current 4.25 to 4.5%. So that would be some pretty serious cuts. So I do believe that we are starting to price in a decent amount of that. You guys have to remember, the market is always forward-looking. Umar, 82% odds right now that we cut on September 17th. So number one is, okay, some of it's pricing, because everything about the market, guys, and I can't say this enough times, is risk versus reward. That's what it's all about. And at the moment, and how I've been feeling, is that I see higher odds, and I've been seeing higher odds, that a 5% pullback is more likely than a 5% gain. I'm skewing the odds more towards favoring downside. With that being said, now that's just one side of it. Is like, okay, we're pricing in a good amount of cuts. The other side of this that I'm concerned about is, okay, we cut rates the way the market is anticipating, and yes, the odds, the odds have fallen. They were 94% last week. It's now down to 82%. Okay, user, I'm a fan of Uber. I have it modeled out for my clients. I think fair value is somewhere around 98, but I can see a bull case scenario around like 118 to 120 ish. If I don't want to say too much, but I've been doing very, very well on it. My average is in the 60s. Okay, I don't like to talk about my holdings, but I've been killing it on Uber. I entered this year. Now, what are some other concerns here? I'm concerned that, okay, let's say the odds are right. Let's say the odds are correct, and we do cut rates. I am keeping close tabs now on October and November CPI prints, inflation prints, because I am nervous that if we start to see, and it's already starting to curl back up, if we see inflation continue to curl higher with two things. One, the rate cut, but maybe even more so, a continued delayed effect of tariffs seeping through the prints, okay, and eventually showing themselves, displaying the effects. It puts us investors and the Fed in a weird predicament where it's, okay, maybe now we can't continue to cut the way many banks are another 2 times after September. What does that mean for the terminal rate? And are we now in a stagflationary environment? What do the jobs prints start to look like? Because they've been rather weak. So now you're in a really interesting scenario here where I wouldn't call it stagflationary unless CPI is above 4%. But if that's not a fruitful environment for equities, is what I'm saying here. All right. Coming into the year, every time the year starts, I put out a 100 to 150 page document of what my expectations are for the year. I'm actually going to take a moment here and show you guys what I was expecting this year and what's transpired so far. Plus, I also want you guys to get an idea of the kind of content that I put out for my subscribers. Before I do so, user, your long-term Uber, well, that makes 2 of us. 2Z, thoughts on UFC Paramount deal and what it means for TKO. I'm spilling the beans here. I sold all of my TKO at 193 last week. All right, it's already pulled back a little bit since then. It was exactly what I was modeling on my DCF. Okay, my discounted cash flow model, I was already modeling around 1.1 billion, 1.2 billion. So it didn't really move the needle too much on my model. I am now officially out. My average was 88. I made an absolute killing on TKO. It worked out perfectly. I owned it for about 2 years. But now I am no longer in TKO. Why? I find it to be properly priced, and now I don't see too many catalysts on board. As a UFC fan, absolutely thrilled that the pay-per-view model is gone. Okay, so huge there. Can we even count on, hey Brendan, what's going on, man? Can we even count on jobs numbers going forward? We gotta really put an asterisk next to all of them at this point. I would agree with you. It's tough to rely on these numbers. Honestly, any of these numbers at this point. Now let me show you guys really quickly here. When you join Cube, you get access to the Google Drive that has all of the content that I do. Let me just open this up for you guys. Second. So like you get my research reports, all this kind of stuff. Jeff, what's going on? First time caller, long time listener. Troy and I want to know your thoughts on why STEM is moving. We could check it out. Probably not too much. Will Intel survive? Probably survive, but I'm not sharing the same enthusiasm as a lot of other guys are. All right. Let me see here. Let me 1 second, guys. All right, comments starting to pour in now. Got to keep up. Okay. Candy P Growth, not a fan, Trent. Open Door, hate their business model. If I don't get 10% APY on my money, my husband's going to hit me. What should I do? You're also okay. Good luck, bro. Thoughts on Netflix this week? What do you mean by that, Brady? I'm not a short-term trader, brother. I only invest long-term. VG versus LNG. Let's see what we got there. We'll take a look. VG versus LNG. Cooper, I am a fan of Grab. Solid amount of cash on hand, like $6 billion. Now, you see, the thing about Grab that's very interesting to me, management decided to raise debt, and I think without any need for it. They're generating free cash flow, doing about 3 billion a year in revenue, growing 15 to 20% a year, hitting operating leverage, generating EBITDA, generating earnings per share now. They had like 5 billion of cash on hand and no debt. Then they went and raised, I believe, over $1 billion in convertible notes, or just straight debt. My memory is a little cloudy, and I think the only reason they would go ahead and do something like that is because I think they want to make the merger happen with GoTo. And if they do that, they kind of have like a monopoly on all of Southeast Asia in the places they operate in. So, but point blank, I do like Grab here. I love founder-led, founder-run companies as well. Chris, what's on sale right now? Not a lot, dude. It's hard to find value right now in this market with things so elevated. I am looking left and right under every rock I can, and I model a lot of companies. I'm just left like disappointed because there's just not a lot of, meat left on the bone, so to say. I like to invest in bonds, but I don't know any to invest into. Any thoughts, Chris? There's plenty of government bond ETFs. Now, if you ask me, high yield, I'm not interested in, like junk bonds for additional return, because the yield spreads haven't blown out yet, and even then I wouldn't want to. I want to own higher quality names, higher quality bonds with higher quality credit ratings. With that being said, the main risk to bonds right now is if we cut rates and inflation comes back, then we really can't cut much more, and then that makes it hard for bonds to appreciate. Because, again, they're inversely related. Bond prices and rates. Let's see here. Nebius, I am torn on Nebius simply because they have three parts of their business with Toloka, their cloud, and then Avride. I wish the business model was a little cleaner. SMC, I don't like. Anytime a company crosses up with their financials, no interest at all. Plus, their last earnings report was nothing that I'm a fan of. I don't mind American Express. Amazon, I like long-term, big time. Chris, the only bonds I would consider owning right now are U.S. government bonds. BMNR, I'd rather just own Ether. Solar, I'm staying away from right now. CoreWeave, I don't like their financials at all. DraftKings, I like. Rhythm is, I believe, if I'm not mistaken, Rhythm is kind of dependent on lower rates. I think NVIDIA will rise in earnings, but I don't expect a very big move. I think in most cases, NVIDIA is going to burn the put and call players. I actually like Wix, Joe, but be careful. They still need to, I believe, I haven't checked in the last like 2-3 weeks. I have the name actually modeled out. They need to refinance some debt that's due next year. I am waiting for that to clear up before I step in, but I'm actually pretty interested in the company. I like the AI tools that they're launching. I like their revenue growth. I like the profitability. I like the valuation, but they got that overhang of debt nearby. So just keep an eye on that, all right? BBAI, don't like it all. You guys were bugging me saying it's the next Palantir. I said, no way, Jose. And it's been very clear it's not the next Palantir. Their last earnings report was pretty nasty. Chris, I do like Google. Sperry, I do not like Snap. I don't know how you monetize their audience group. They don't have any money. Their attention span is less than a gerbil. Just no interest at all. And then with regard to JD, I have no interest in Chinese names. Sold all of them like 5 years ago. Max, I absolutely love Microsoft. I updated my model after that blowout earnings report. It literally added like $40 to my fair value price. You will be getting that, Max, this month. Give me. I'm shooting for a Monday delivery on the massive document. The reason there's a little bit of a slowdown here with my document of how I performed, so that you guys might not know, for those who are new, I've been working on Cube. It's my company for 8 years full time. And I have around 200 members that I work with daily, essentially. And I create financial models and equity research reports, and I also put out reports on how my portfolio is performing. So after every quarter, every half a year, I put that out, and it has my updated models, updated research. I've been very clear. I've been long Microsoft for a very long time. So Max, you will be getting the updated research, hopefully on Monday with the updated model attached. All right, you're going to see a pretty large jump up in Microsoft's price target just because of how amazing that last earnings report was. Oklo, too expensive for me. Flutter 2Z, I like. Flutter, if you're more of a bigger fan of FanDuel and a little bit more diversified than that of DraftKings, but I do like both. Biggest risk to both names is really legislation and taxation, things like that. Cooper, I put out a equity report on Hims and Hers about 2 years ago or so when it was $6 a share. My subscribers made a killing on it. I told them pull the trigger, sell everything at 60. They did. I'm kind of done with the name now. VKTX, still a buy. So I analyze these numbers. Okay, I'm very interested in the obesity drug space. I gotta say, I think oversold in those numbers. I think what management needs to do is fix their titration scheduling, right? I think on the, and forgive me guys, you probably hear my dog bark in the background. Who knows? You probably sees a cat in the backyard. So apologies for that if that's being picked up by the mic. When we're looking at the data that just came out with their phase 2 of their oral, because I think when you look at obesity drugs, the oral space, I think is the end all be all. I think that's exactly where everyone wants to be at the end of the day. I don't think taking a shot once a week is where the industry wants to mature to. So I think whoever has the best oral form is going to win this space. So you look at the numbers, the biggest concern why Viking fell is the amount of people that discontinued the treatment. It was quite high. But the caveat here is that no one is testing 120 milligram dosages of their pill form. And that's what Viking was going for. Now, it was only a 13-week trial, whereas Novo is 68-week and Eli Lilly 72-week. The issue here is a lot of people backed out of the treatment for Viking. And I think that's because, again, 120 milligrams is, like, no joke, 3 to 4 times larger dosage than that of Eli Lilly and Novo. Novo is doing a 50 milligram dosage on their data, and then Eli Lilly is doing a 36 milligram, I believe. So when you look at the differences, the weight loss on Viking's drug was very strong, but people had a lot of adverse events with like nausea and vomiting, so they discontinued it. But what struck me so odd is that like 18% of the people on the placebo, a sugar pill, it's nothing, also backed out. So I'm wondering if social media influenced people to like be weary of these obesity drugs, because I've been seeing a lot of people, you know, on TikTok and Instagram talking about, I've heard people are going blind on this. I heard when people stop taking it, they gain even more weight. I think that affected some of the testing pool. It was a much smaller testing pool than that of Eli Lilly and Novo. Point blank, though, I think I agree with BTIG analysts. I think it was a little oversold. It's still a very competitive drug compared to Novo and Lilly. Sorry for running off a little too much there. OC, I'm not a fan of Gilead's pipeline. It looks a little mundane to me. Johnny Boy, Palantir, still overvalued in my opinion. Doc U, one trick pony, not a fan. Dan, what's going on? Good to see you here, man. I froze a little bit. Oh, shoot. Am I back now, guys? Are we good now, guys? I'm a fan of Celestica. Hunter, I told you, man, just be patient with Microsoft, dude. Just be patient with it. Okay, we're good. All right, awesome. Terrawolf, not a fan. I'd rather just own the crypto outright, personally. No issues on your end. Awesome. UNH, not a fan. I just caught a little pump, obviously, from Buffett. But again, I don't want to take the risk with legislation. I'm interested in healthcare, just not the insurance providers. BNMR would rather just go with Ether. Andres, I doubled my money on 4, bought in at 35, sold at 77. I'm on the sidelines now, but I did see the CEO and founder who came back because he left to go to NASA and came back. It looks like he bought like, what, $16 million worth of shares? Appreciate that, Dan. Tuesday, I like the eVTOLs, but I'm not pulling the trigger on them just yet. That's probably more of a 2026 play for me. I do like Rocket Lab, Steve. One of maybe only 3 space companies that I actually would ever consider owning. Okay, let me get back to something really quickly here. I'm not sure CSL. I'll add this to the list here. We'll get around to it. Because I wanted to show you guys something, but I got sidetracked. OXSQ. Never heard of that. So when you subscribe to Cube, right, you get all my research reports, all of my models, all that kind of stuff. We hop on quarterly meetings, onboarding meeting. It's usually 2 hours long to walk you through my portfolio, get to know each other a little bit. So just want you guys to see my annual outlook here. I put this out every January. As you guys can tell, I've been doing a lot of them. 2020, 21, 22, 23, 24, 25. This is what I was thinking. Disruption at every level was my theme. I put a theme out every year. Who's going to be Hamzat? No one anytime soon, dude. I lay this all out, okay, how I'm feeling, bullish, bearish, all this kind of stuff. 2024 review. Let me get to what I wanted to show you guys. This is 150 pages of data, guys. All right. And then eventually where I think things are going. My projection for earnings per share, all that kind of stuff. My estimate for 2025 S&P 500 earnings was 268, a little bit below the market at 273. But my base case here, and this is what I was trying to come back to because I started off the stream tonight talking about why I've been moving to cash a little bit. Now, coming into the year, my base case target for the S&P 500 was 63.50. Okay, Jeff's been a long time Cube member, best value out there. If you're on the fence to join, do it. Thank you so much, Jeff. We just had a quarterly meeting not too long ago. I placed 70% probability on this happening, and this is what looks like has transpired so far. We still got another 3-4 months left in the year. Okay. Now my bull case was 6,700, but here's the thing about this. Why I'm like, can we squeeze another, 200 points, 300 points out of the SPY? Well, under this scenario, and this hasn't been panning out perfectly well. I'll zoom in a little bit more for you guys, and that's why I placed only 10% odds of this. U.S. economy grows 2.5%. That is not looking likely right now. Okay, that's probably not going to happen. Inflation subsiding to sub 2.3%, also not likely to happen. Unemployment rate remaining under 4.2%, probably going to be somewhere around there, but not going to happen. S&P earnings growing 14% to 278 plus. That'd be pretty difficult. Right now, let's see what actually estimates are. S&P 500 earnings per share estimates. I think Yardeni usually gives them out. Let's see what Yardeni's saying here. What is the estimate here for earnings per share this now after all these quarterly reports? Let's see if he's got it for us. Ruben agrees with Jeff. Thank you, Ruben. Appreciate you, man. Here it is. I think this is it. All right. 2025 Yardeni earnings forecast $260 per share. Yeah, 260. I think that is the number. And coming into the year, my guess was 268. So in my bull case here, guys, 278, this is likely not going to happen. All right. And again, this plays into why I've been moving into cash a little bit. Tensions between Russia and Ukraine, Middle East, hasn't really been happening. Fed able to gradually cut rates 75 bips. That's looking like it's going to, what the year's going to end at right now, according to average analysts and the Fed funds futures. But we'll see here. And then, yeah, this assumes a Goldilocks scenario where we're able to maintain healthy employment, maintain growth, bring inflation close to 2% while cutting rates. You know what kind of needle you're talking about threading here? And then my bear case was about an 11% drop. I wasn't much of a doomsdayer coming into this year thinking, we're going to drop to 4,000. Some people really had that target. I wasn't of that mindset. And I placed 20% probability on this. So coming into the year, this is where your average analyst was, all that kind of stuff. So again, you would get access to all these documents, guys. I put out equity research reports like this one on Deckers that owns Hoka as well as UGG, and then when I tell you guys my models, this was an accompanied financial model on Deckers, breaking down how I see UGG and Hoka and their other brands growing and how that matriculates down into free cash flow. I don't know anyone else that does this stuff, guys. I'm not a course guy. I don't make courses. That's just ridiculous. How can you even make a course? Everyone's got different investment goals and different risk appetites. There's not one size fits all when it comes to investing. But what I do like to do is create financial models and do deep dive research to provide a multitude of different ideas and types of investments. Some of them come back awful. Like it's not like, they're just, I'm looking for what's the next big buy. Sometimes I do a model to see where I end up, and it's like, wow, this thing's calling for 30% downside. So that just gives you guys a little bit of context to what I do. Let's get back into some of these questions here. And again, for those wondering, my background, been doing this full time for 8 years. Before that, I was over at JP Morgan. Only spent a couple years there before I left. I did pass my series exams, but they've expired now. But yes, so I do have some experience to say the least. All right. Is there a reason the market went downwards today? I think it's nerves here, Ty, heading into Powell's speech on Friday. What about OpenAI IPO? I mean, I would love that. I would love that, and then I would love Microsoft to start liquidating some of that. But I would love to see that IPO happen. I mean, I can only imagine what the figure would be at right now. All right. Looking for gold to break out to the upside? Let's take a look. I'm not much of a chart guy, but let's see what we got here. 4 is a fintech company. OC, you're really going to want to see the 50-day moving average break here at 308.48. If that does, you are looking clear to 312.48. All right. But yeah, I mean, this looks like it wants to just be a bull flag breakout, holding on to the Fibonacci level on the weekly at 301. Gold really does look like it wants to leg higher here. Yeah, it really does. It just has to get through this 50-day moving average, and it's clear to 312. But this area, this 312, 315 area has been denied 4 times now. So keep an eye on that, all right? But again, I'm more of a long-term investor based on financials and fundamentals. I do use charts once in a while to maybe set some stop losses, or if I'm trying to enter a position where I can, try to time it best. But I don't go crazy. I don't go too crazy with regards to technical analysis. I feel like if you add too many indicators, you get paralysis by analysis. I don't like Open Door. I think the business model is flawed. No interest in it whatsoever. Let's take a look here now. Let me see here. What was this? VG versus LNG. Okay. Venture Global? Why have I heard this before? Teladoc, not a fan. Not enough growth. Max, I completely agree. Less is definitely more of a charting. I agree with that. Venture Global is development, construction, and production of natural gas liquefaction, export projects, nat gas transport. So Venture Global is a midstreamer, because I'm very interested in midstreamers. And it's actually so funny that you're mentioning nat gas. Cheniere is a nice name too. I don't follow it too closely, because in the group chat, which you guys also get access to when you subscribe to Cube, where we're debating stocks, debating crypto. No one's day trading. Let me just hide some stuff here. This is exactly what I just put before I started the stream at 9 p.m. And this is where I put at 8:57. Because I've been very bullish on nat gas, okay? The transformation of energy into intelligence is one of the most profound economic shifts we will likely witness in our lifetimes. And the transformation is only the initial phase of shifting leadership toward a new group of winners that include nuclear and natural gas independent power producers such as Constellation Energy, NextEra Energy, NRG Energy, Talon Energy, and Vistra, Melius Research said in a new report Wednesday. The IPPs are perhaps the best positioned to benefit from surging electricity demand from electrification and the data center build-out, noting these companies are more agile than regulated utilities and can quickly respond to market needs, which is increasingly important in the budding data center AI infrastructure build-out boom. Okay? Brendan says this chat alone is worth the sub. Thank you, man. So with regard to each individual name, this is what Melius said. Constellation is the leading provider of nuclear power and generates 10% of all power generated in the U.S., and said the Calpine acquisition will strengthen its already formidable market presence. NextEra Energy combines 2 business models, a regulated utility with an IPP arm, and is the world's largest provider of renewable energy, investing heavily in batteries, hydrogen, and grid modernization. NRG Energy has an integration and a retail model supplying 16 gigawatts of generation capacity, including natural gas, coal, nuclear, solar, and wind, and supplies more than 8 million residential and business customers. Talon, according to Melius Research, has implemented a strategic transformation following bankruptcy in 2022, investing in data center powered energy solutions, aligning with the rise of AI and cloud computing, and is repurposing legacy fossil sites for digital infrastructure rather than retiring them. And then Vistra is a major player in the power markets with 41 gigawatts of generation capacity, including generation from nuclear, nat gas, coal, and solar, and it owns the Moss Landing energy storage facility in California, which is one of the world's largest battery storage systems. And then lastly, just to give you guys a little bit more here, Melius said natural gas will be the primary reliable energy source for the electrification surge and the growth in power demand, which will occur in a variety of ways, such as new build nat gas power plants, co-location of new builds with data centers, and significant growth in the trade of LNG, liquefied natural gas, with Henry Hub gas for 2026 forecasted at $3.50 and for 2027 forecasted at $4. So if you guys, many of you guys are in the group chat, you know what ETS I have been talking about with regard to playing natural gas. You guys, this pretty much is echoing what my thoughts have been for the last several months. I also like that nat gas is relatively cheap, relatively clean, and it's also off the grid and well reliable. So yes, LNG is definitely a way you can play it, as is Venture Global. I am gonna go, Toby, though, with a ETF, just because nat gas, the midstreamers, it's not my forte. It's not something that I could tell you I know truly like the back of my hand. And whenever I'm in that situation, I usually just rock with a ETF to own the whole basket of names. And a cool thing too about the midstreamers, for example, they pay pretty nice yields. They really do. And I also like how their contracts are structured. They're less reliable on the price of the commodity, things of that sort. So definitely definitely a lot to like there. So that's just a little bit of a tidbit for you guys with regard to nat gas and utility players. Utility I've been making a killing on. I don't like CoreWeave, Greg. I don't like their customer concentration. I'm not really a fan of their business model. Don't like the balance sheet. Yeah, now with the lockup period expired, I'm curious if management's going to start dumping. Hey, know your need. Appreciate you being here, man. Good to see you. Coin tomorrow? I don't know about coin tomorrow, man. I'm a long-term investor, guys. I don't really care what anything does tomorrow. So Shaney asked about Reddit. Reddit is a name. Someone asked me like 4 months ago. All right, they said, give me a stock that you don't own that you would buy right now. And if it knocks out the park, I'll join Cube. And the name I gave was Reddit at 103. Reddit is now, and there's receipts of this. Reddit is now, it hit 255. It's now 218. The reason I was so able to confidently say that Reddit at 100 is because I put out a model on it. So guys, again, when you join Cube, you get my access to my models. Okay? And look at the top one right here, Reddit. So a good amount of Cube guys made a killing on this. Okay? Thank you, Brendan. Reddit model was spot on. So now when I look at my Reddit model, it's not implying much upside anymore now because it just 2.5x'd. All right? So now, for me, not the biggest fan. And that was the floor. It was trading right near my bear case price target. It worked out beautifully. Guys, I rely on my models wholeheartedly when investing. Okay? Ricardo, I sold my PayPal at 78, something like that. I took my loss on it. It wasn't that big of a loss, but I just haven't been pleased too much with the new management. I was hoping Chris would be a little bit more gutsy. Lethal, what's going on, man? Good to see you. That's cool, Toby. Teledoc, I think, is a one-trick pony. What do you think about Kava earning support? I think it was a little rough. From a top-line perspective, yes. From a bottom-line perspective, not bad. In fact, they reduced their same-store sales guidance for the year, but maintained their full-year EBITDA guidance, which was nice. But there's been a material slowdown in same-store sales growth, and I think this speaks less so to Kava as it does to the industry as a whole. Even Chipotle and Starbucks are seeing negative same-store sales growth. They're seeing a contraction in same-store sales growth, which I tell you guys all the time is the most important metric when looking at restaurant chains. And we saw Kava report just 2% same-store sales growth, which is pretty rough. So I think that stock's going to trade sideways for a while until that number rebounds. And I think it's more indicative of people pinching their wallets a little bit, quite honestly. Sperry, I'm not familiar with NN. Thoughts on UNH? No interest at all. Mainly because I just don't. I can't put my faith with regard to where legislation goes with this administration. SoFi, I talk about SoFi every stream. I'll be pretty straightforward with this one. They've been crushing it, but I don't buy any stocks I can't confidently model, and their business model is a little complex as to how they exactly make money. But I have to say, based on their reports, the way they're beating on top and bottom line is just incredible. Merck, I don't find their pipeline to be very attractive. Have I already covered BBAI? Yeah, I don't like it at all. That earnings report was tough. Joseph says, yeah, eating at home is better and cheaper. Yeah, that's the truth. Novo, I'm starting to favor again because of Eli Lilly's weakness in their relative weakness in their oral form of their drug. Buffett and Tepper have faith in UNH, but I don't. Yeah, no, I don't. And I've disagreed with these guys many times. It's not about UNH specifically. It's my concern around and how in the dark I am with regard to legislation. Oh, interesting, Sperry. Interesting. Let me see here. Yeah, exactly, Professor. Yeah, that's exactly it. I like AMD. I'm a fan of AMD still. That was the name I was pounding the table on, sub 100. I decided to invest in Broadcom instead, though. No, Lethal. Well, I think it depends, Lethal. Do I think AI will destroy software? No, I don't. Some maybe companies, sure, but generally speaking, no. And that's why I think there's some opportunities in software. Let me write some of these names down now. Thoughts on CRM? They are flopping, Joe, and that goes into what Lethal's saying here about AI destroying software. People are concerned that CRM is no longer a growth stock. Mex, any utility stocks you like? I just went through several of them, Mex, with regard to Constellation, NRG Energy, Nextera Energy, Vistra. I own the basket. I own an ETF for utilities. I think DJ. I think Lulu's trading at 5-year lows for a reason, man. If we go into a tighter economy, $100 leggings are the first thing to go. Shaney, with regard to Nebius, I am interested in the company. I like it more than CoreWeave, but again, another complex business model with regard to their three companies. When we're talking about the cloud, Toloka, and then Avride. I actually like Nubank. Nubank's one of only a handful of Brazilian companies I like, but their earnings report was solid. I think that's a company that's executing very, very well. I like Deckers. I'm not. So this goes hand in hand with Lulu. I don't favor right now consumer discretionary names too much, but if I had to pick two to buy, it would probably be either Deckers or On. Like brands I think could fight the trend. MSTY, no interest. I'd rather just own the Bitcoin outright. So if we can stop spamming that, that'd be great. Ricardo, I have a model on HIMS. It's somewhere in here. Yeah, it's right here. If you want to shoot me a direct message, I'd be glad to show you this on the house so you can get an idea of the quality of work I do, man, if you want. And then the cool thing about my models is you can play with the numbers yourself and arrive at your own price target. I like SCHD. Personally, I do. Guys, I've been live for like 45 minutes. Let's go, man. Anyone new to the stream, throw the stream a follow. What are we doing? Pat, thank you, man. Let's go, guys. Jeez. I'm going to pause for 1 second here. What I'd like you guys to do is one of three things, if not all three things. Number one, throw the stream a follow. That'd be great. Number two, I'd like you guys to consider joining my free weekly newsletter. I write it every Monday morning at 8:30 a.m. Eastern Time, unless it's a holiday. Okay? And then, if you guys would like to get these research reports, like to get these models, see everything that I own, join the group chat, all that kind of stuff, you could go ahead and look at the 3 different plans if you guys would like. I will let you guys know after Labor Day weekend, the prices are going up. So if you subscribe before that, you will be grandfathered in. You will be locked in at that discounted rate. You will not see a price increase after Labor Day. That will be only for people who subscribe after Labor Day. Okay, guys? But right now, the lowest plan starts at just $40 a month, but the most popular one is the red one. That's $75. All right? So please do one of those 3 things, guys. Follow the page, join the free newsletter, and if you really want all this access to this content, see everything I own, what I'm bullish on, find out how I'm up 36% this year, actually 37% because we rebounded into the close, you'd have to join Cube to know what those names are that I'm most bullish on. And again, if you're interested in day trading, I'm not your guy. Just telling you guys straight up, I buy and hold for, on average, 5+ years. How long do I spend daily on it? Bro, I don't know, 10, 12 hours a day, probably, something like that. Ruben says, I'm glad I'm already in, worth every penny. Thank you, Ruben. Thank you so much. I don't know anything about N1 Finance. I know nothing. MBot, Baby, Intuitive Surgical. All right, you got my interest. Let's see, MBot. Microbot Medical. Let's see what we got here. All right, let me see something. I like Eli Lilly. I still think they're a quality name. I thought their oral drug would be a little stronger, though. Dude, MBot's still too young in its infancy, man. I mean, what are we talking here? Maybe 1 million in revenue this year, 13 million next year. This is a little too small for my blood, man. Let's see, man. When's the last time they reported earnings, bro? They put out a lot of press releases, man. I'm waiting for Chipotle a little lower, Young. A little lower. Just because of that negative same-store sales growth was pretty rough. I think social media impacted last quarter's numbers. Because of the portion sizes and, all that kind of stuff. Yeah, so they're still issuing equity. Where is their freaking latest report? I guess I got to SEC filings. I hate companies that make it difficult like this, man. 10Q. I like SC. Their last report was a banger of one. I mean, what do they have now? 10 billion in cash, like $1 billion in debt. Garena, Free Fire. Garena's game, Free Fire, is back to growing. C-Money, growing very well. Shopee, now generating EBITDA. Every one of their engines now generate EBITDA, generating free cash flow, growing like 25% annually. They're just killing it right now, man. This is a little too small for me, man. We're talking here a company with about 32 million of cash on hand, which is not bad. But if you really want to take over in this space, let's see what the cash flow is looking like. What are they burning? All right, they're only burning. It looks like they're burning about 10 million a year, so they have cash runway here. But they will eventually need to spend more on sales and marketing, which right now, like research and development is only $3 million halfway through the year, man. Like what? How innovative can this be? They're spending such little money. Pre-commercial clinical stage medical device company for next generation robotic endoluminal surgery devices targeting the minimally invasive surgery space. So yeah, so they're not the company incorporated on August 2nd, 1988 in the state of Delaware under the name Cellular Transplants. The original certificate of incorporation was restated in 1992, and they changed the company to Cytotherapeutics. Then another 8 years later, they amended the name to Stem Cells. And then in 2016, they consummated a transaction. So they entered into a merger with Microbot Medical, a private medical device company organized under the state of law of Israel, on the same day, and in connection with the merger, changed its name from Stem Cells to Microbot Medical. I'll tell you, man, anytime I see a history like that, of constant name change, I mean, they went from cellular transplants to cytotherapeutics to Stem Cells Inc. Then they did a merger with an Israeli surgery company, changed the name to that. It's still clinical stage. Man, I'm going to be honest here, man. This doesn't do it for me. There's a up-and-coming intuitive surgical that I am interested in, that I have modeled out, that I think is way more legit than this, man. Way more legit. So if you're interested, please join Cube. I've been waiting for that stock to pull back for a long, long time. The one I'm talking about here, and I'm not saying the ticker. And it's finally come down to an area where my model says it is looking juicy. Hey, Dennis, another Cube sub in here. What's going on, man? Holy buzzwords. You ain't kidding. What's the best book to get sharper at this style of trading? Sperry, I'm not a trader. I am a long-term fundamental investor. I think looking at things like Random Walk Down Wall Street, One Up on Wall Street by Peter Lynch, those are some good starting points. Sounds like a future crypto treasury company. Yeah, you ain't kidding with all the name changes and stuff. Thoughts on Rivian and the R2s that release next year? Hunter, I just don't see a path to profitability right now, man. It's still too soon for me to pull the trigger on a name like Rivian. I have no interest whatsoever. Mexi, Seagate's not bad. Brendan, seems like they spent all their money on stock photos and their robots to remove splinters. You always have good punchlines, man. What do I think about UPS? I like UPS, although the last couple years I've switched to favoring FedEx. I was always pro UPS, not from a customer standpoint, from an investor standpoint. And then FedEx is starting to execute much better, and I still think FedEx is the better name right now, believe it or not. But there's some, you can go value fishing at UPS. I'm just a little worried about maybe the economy, things like that. How long a runway do you normally like to see? Yeah, usually 2 to 3 years lethal if they're not a profitable free cash flowing company just yet. I just need to see that the path to getting there is, visible. I need to make sure the path is there. So it's like, okay, is there any operating leverage here? What are their gross margins like? How quickly can they scale? Things like that. I just need to know if you're leaning more Scotty or Chorn. Ruben, I'm leaning more Chorn. Let's see here. What do I think about Bloom Energy? I really don't know much about Bloom. That Addict, that's one. I know I've been went off like 100 tickers off the top of my head. Unfortunately, I don't know everything there is to know about every company, especially when it comes to energy companies, which I alluded to earlier. It's not my forte. Joseph, I'm assuming Workday has earnings. If so, I don't follow the name closely enough to say whether they're going to be or not. Historically, I do believe they beat. I like the name long term, but I'm not too familiar with how the earnings report's going to go. All right, let's see. I'll add pod to the list. I'll give you some financials on Bloom, though. I could do that for you, Attic. All right, let's look at CSL, man. And see, just real quick before I go to CSL, this is what I do for Cube members all the time. I dig into SEC filings to help you avoid some very suspect companies like this one right here. Like, this does not pass my smell test whatsoever. All right? I need you guys to understand something. I know so many of you want, like, these amazing returns. And don't get me wrong, I'm invested in things that have made me anywhere from 2x to 10x. I'm looking for those opportunities too. But what I am trying to get through to you is you don't need to find a super, super small penny stock to get that. Many companies go from $1 billion market cap to 10 billion. Many companies go from $10 billion market cap to 100 billion. Some companies go from $100 billion market cap to a trillion. Those are all 10x's. So, I really, Sperry, I'm a big fan of tech. I do like technology. But it just with regard to like energy names, it's you got to have some solid experience to really cover energy at least successfully. Justin, what's going on, man? What's happening with Crowd? Well, I mean, I sold it for a double. Admittedly, sold it too soon. I'm now in a different cybersecurity company that I think has some strong upside potential. I think Crowd is still a solid name, but I think the valuation is just too steep right now. And Lethal, that is why I actually take Palo Alto over Crowd, because I actually do like the CyberArk acquisition. In fact, I used to own CyberArk back in the day and also did very well with that. Honestly, my model on Nvidia doesn't really imply much upside. Boeing looks like they're laying the groundwork for a turnaround. Like, if you told me right now, what do I think is going to produce a higher return in the next, like, 2 years? I actually think I might take Boeing. Will is, Ruben. Will is. We have not started yet, so hit him up. Hit him up. Lethal, I'm not a fan of Zeta. Have you read some short reports on Zeta? I'm just a little nervous. I mean, look at the valuation here on Crowd, man. Don't get me wrong. This is best in class. It is. It's best in class. But, you know, and they're still expected to grow 20% plus for the next 6 years in a row. But do I really want to pay 50 times 2030 non-GAAP earnings? I really don't. I don't. I love the growth rate, and you know their earnings per share is not even the bottom line is not even growing this year. You know, you're gonna see a 10% contraction in bottom line earnings per share this year. Fine, it bounces back 35% next year, but do I want to pay 89 times next year's earnings, 68 times the year after that? I think there's better value in other names right now. I really do. Within the cybersecurity space, you know. So, yeah, Lethal, look up Zeta short report. I got too scared from it, man. FICO, I'll pass on FICO. Let me see what CSL is doing here. I think, is the guy that asked about CSL still here? Is it Carlisle Company? Is this what we're looking at? Supplier of building envelope products. Single ply roofing solutions. Oh, I know what this is. This is you playing hurricanes coming in, isn't it? This is you playing hurricanes about to knock everyone's roof off, isn't it? Is the guy that asked about CSL here? Answer me that. Roofing company, and with Hurricane Erin coming through, I'm guessing this is the play. That this is the idea here. All right, OXSQ. Valuation does look half bad, though. Oxford Square Capital. All right, so this is a business development corp. Oh, dude, $175 million market cap with a 19% yield. I wave my flag anytime it's like a 13% yield or higher. I wave my red flag. There's no analyst coverage on this thing, and it's likely, if I had to guess, a business development corp. Yeah, well, Nick, what's going on, man? Good to see you. I don't know then. I don't know what his play is there. Financials look decent. 19 times earnings. Looks all right. Let's see what we have next on this list here. Pod. Insolent Corp. Don't they have earnings coming out soon? Okay, Lethal, maybe, yeah. ECL. Okay, we'll add ECL to the list. Let's go, guys. What's up with no followers tonight, bro? Everyone here is a returning viewer? All right. Insolent, man. These growth rates look fantastic. 26% this year, 17% the next 2 years, and then still 10% plus growth 3 years after that. EBITDA growth rates look very healthy. Earnings per share, those growth rates are healthy. A little a little bit expensive on the bottom line, but generally when you see a name like this, they usually beat estimates by a mile. Like, let me see here if I pull up pod seeking alpha and see how much I usually beat by. You're the best stock guy on TikTok, returning viewer here. Thank you, Lethal. Appreciate you, man. Nick, so it deserved to sell. Kava deserved to sell off, but before you joined, I guess you weren't here for it because I spent a good amount of time talking about Kava. If you do compare it to other chains out there, it actually bucked the trend a little bit. Like even Chipotle is posting negative same-store sales growth. Kava was able to eke out a plus 2%. Is that a material slowdown for them? Yes, it is. So it deserved to sell off, re-rate the growth a little bit, especially with the elevated valuation. It makes sense. But is it something to consider for a 2026 rebound? You bet it is. Am I working on a model for my Cube subs? You bet I am. So anyone that is in the Cube family, you will be getting a model on Kava in the very near future. All right, let's see here. Yeah, I figured. I mean, look at this. Beats by 25 cents on a quarter. That's massive. That's massive. So yeah, it makes sense to me, man. Beat by 37 million. This company's right now their products flying off the shelves. So like these estimates for earnings per share could easily see a massive increase. I mean, and look at the disparity between the most bearish and bullish analysts, like for 2027, for example, $5.62 versus $8.19 for 2027. Holy shit, we have someone that actually works at Insulet here? That's crazy. Someone else asked about Insulet stock, and we have an employee that works there in the chat. Srini, dude, you work in marketing, bro? Because you must... You're an intern there. Very cool. Dude, this thing must be flying off the shelves. Lethal, I'll introduce you to Srini. Srini, I'll introduce you to Lethal. That's fucking crazy. Yo, you guys want to hear something crazy that also happened in the Cube group chat? Someone just got another guy a job. He joined Cube like maybe 6 to 9 months ago. Spent a lot of time talking to someone else in the group chat, and ended up getting the guy a job at his firm. So crazy, man. So crazy. This is the power of networking, guys. Power of networking. You do not underestimate the power of networking. Serena, your internship must be coming to an end here. They usually end in August. They offer you the full-time role. If they didn't, then we're short in the company. If they did, we're going long. If they did you wrong, we ain't buying. It's always fun when you're finished internship and then you're like waiting to see if you get the extension for the role full-time. I remember when I was at Merrill Lynch, they offered to me. So what I did was I used it to increase my odds of working full-time at JP Morgan. I waited till the last day to respond to them. I finished my internship way back, oh my god, man, 2014. Merrill Lynch said, hey, we love what you did for us. We'd love to extend the full-time role. I said, how much time do I have to decide? They said November 15th. I said, okay, I'll get back to you. Went to do some interviews. Had some good ones, had some bad ones. The one with JP Morgan went really well. I speak to them. Everything's going beautiful. At the end of the interview, I said, if you don't mind me asking, what's the turnaround time frame to find out if I'm ready for a second interview? This was in September when I got back to school. And they said, usually 3-4 months. I said, I literally saved this for the last part of the interview. I said, that's unfortunate because I have to get back to Merrill Lynch. They offered me the full-time job by November. And then they said, oh, really? Okay, well, we have your email. We'll be in touch. The next week, they had me come in for the second interview. And then it took about 3 weeks after that to hear back from them for the full-time role. I accepted the full-time role formally on November 13th, which is my birthday. And then I told JP Merrill Lynch on the 14th, a day before I had the time to respond to them, that I won't be returning. But just goes to show, man, their arbitrary dates are bullshit. Like, oh yeah, it would take 3 to 4 months to get back to you for a second interview. I got the second interview the next week. Really cool, Serena. Well, listen, man, the Insulet is selling off the shelves, dude. Their product. Top 5 things I should study for long-term investing. Income statement, balance sheet, cash flow statement. If you're going to be investing in individual companies, you need to be able to do financial analysis. The next one I'm going to give you, which I probably should have even put first, is understanding management teams. Who is successful? How are they successful? What represents a good leader? What represents good management teams? A really good book written by Jim Collins, I think his name was, Good to Great. Really good read in trying to understand who solid management teams are, what kind of traits you look for in C-level executives. And then number 5, familiarize yourself with the macro environment. Yes, you can read A Random Walk Down Wall Street. You can read Intelligent Investor. I kind of view them as very similar. I would add some other books to that if I can. I would say read One Up on Wall Street by Peter Lynch. Read The Only Game in Town by Muhammad El-Erian. And I would read The Deficit Myth by Stephanie Kelton. I think those are some great books to read. ECL is on our list. I'm going to get to it shortly. You have $100,000 to invest long-term stocks. What are some good ones with at least 7 to 9% return? This is why I say joining Cube is important. Because, brother, that is exactly the type of people I help. So when you join Cube, depending on whether you pick the green subscription, the red, or the blue subscription, it comes with a 2-hour onboarding meeting. So we can walk through my portfolio together with all my research. I can bring some ideas to your table. Obviously, at the end of the day, it's your decision to if you like my names or not. I also grilled the hell out of your portfolio, just like a third-party perspective. But if what you're asking, man, is exactly who I helped for the last 8 years. I have 200 clients. I exactly help with the same thing. So glad to hear you have 100K. Glad to hear you're looking for 7 to 9% returns. You definitely want to check out one of the subscription plans so we can hop on that 2-hour Zoom conference or phone call if you prefer that. So I can walk you through some names I'm very, very excited about. My goal usually is like 10 to 13% annually. This year has been crazy. I'm up 37% this year. That does not happen too often, but it has been fun. A lot of my long-term, I only invest long-term, they've been going crazy. The thesis is playing out. Thoughts on AI stocks? I hate most of them, like a few, Riker. There's a little bit of a bubble forming, if you ask me, in some names. Oh, August 20th is your birthday? Happy birthday. Can you repeat the other book titles? Yes, so what I said was, I'll write it down. Recommended books. I like One Up on Wall Street. Peter Lynch. I like Only Game in Town by Muhammad El-Erian. I like Deficit Myth. Oh, man. By Stephanie Kelton. I also like Good to Great by, I think it's Jim Collins. And then, did I mention any other ones? I think that was the ones I mentioned. In addition to A Random Walk Down Wall Street. Brandon says, the one-to-one aspect of the subscription is incredibly valuable. He'll know your portfolio as well as you do. Thank you, brother. Appreciate you, man. And we just had our quarterly meeting today. CoreWeave, Cincy, I'm not a fan of at all. I own CoreWeave pre-IPO, shares at 19, pre-share that just came off lockup. Should I sell them? I can't tell you what to do, Jack. That would be investment advice, so I can't tell you what to do. But I'll just tell you this much. I don't like the company, don't like the financials, don't like the balance sheet, don't like the revenue concentration with, a select few customers. And I did say I would be very wary of the stock because the lockup period expired. And I expect insiders to sell. And the fact that you own some pre-IPO shares and the lockup expired and you're looking to sell kind of fits my thesis. What are your thoughts on a small 10-stock portfolio and like a single stock making up 20 to 30% of port? Lethal, I think that One individual name making up 20 to 30% of your port is a little risky. I do believe, though, Buffett has said if he was starting out today, this is not me saying it, Buffett said if he was starting out today trying to grow his capital, not starting with a lot of money, he would be going heavy into one conviction stock. I'm not saying to do that, but that is what Buffett said he would be doing if he was starting today. My portfolio lethal is usually 25 names. I don't like to cross 10% weight in any name. Now, I have one of my companies that makes up 25% of my portfolio right now, but that's also because it 3x'd. So that's different, right? That's a good problem to have. Paul, I think Duolingo is a little too expensive right now. PayPal, I sold for a loss. I was hoping Alex Chris would be more aggressive. Star, thank you for the follow. Let's get some more follows today, guys. Come on now. The world needs data centers, and Corey was a huge future player, in my opinion. I agree, Cincy, but I don't like the valuation. Don't like that Microsoft makes up so much of revenues. Don't like the debt on the balance sheet. I'm with you on data centers. I'm playing it a different way. All right. Anytime, Jack. Anytime. Let's see here. I think I got to them. Yes. Okay. Okay. I'm all caught up. I should have reshorted Palantir, man. It's just, I'm just going to stay clear right now, man. I did great shorting it. I got really lucky shorting it, if I'm being quite honest. Shorting at 114 and covering at 90. But I was playing with fire. I've shorted other companies that are absolute trash. I just shorted another company. I did it for my father. So if I say me, this is a little disingenuous. I did it in my father's account. Just to generate some alpha for him. I shorted at 20, a stock at 27, and I closed out at 16. Just because it's a piece of shit company. So I just prefer to, if I can, just short crap companies, man. If there's short shares available. That's usually the tough part. Either there's not. Of course, I'm not going to bill my father, man. Of course. That's part of the perks of having a son in finance. But BTAI I know nothing about. What do I think about TTD? I put in the newsletter last week. Let me see here. What did I put? Analyst was talking about it. Let me pull it up. You guys need to join the free weekly newsletter at a minimum, man. Let me pull it up here. Guys, I have no interest in UNH. It's not because of the company specifically. It's about me always feeling like I'm in the dark because I don't know what's going to happen with this administration and the legislation around healthcare. Where is it that I covered it? Was it last week or the week before? I think it was the week before. Wow. Weeks are flying by, guys. Here it is. So in the newsletter, I covered right here, Trade Desk could be at risk of losing one of its most valuable clients, Walmart. According to a report by The Information citing sources, the retail giant last year renegotiated its agreement with Trade Desk and now has the option to use ad buying platforms of other firms. Under the previous agreement, which lasted for 4 years, Trade Desk was the exclusive technology provider to advertisers buying spots on the web using Walmart shopper data for targeting. The report said the move might benefit direct rival Amazon, which has recently ramped up its efforts to handle the sale of ads across the web and has been offering advertisers incentives to woo them away from Trade Desk. So just take that with what you will, okay? And to the person that asked about Nubank, I covered their earnings right here. They absolutely knocked it out of the park. Andres, I cannot get behind Palantir with this valuation. I know I've been saying that for a while. I did short it. I made money on it. I'm probably not going to short it again right now just because it's just so beloved by Wall Street. It's actually shocking to me. I don't... It's just crazy. On Mag 7, no lethal. But I have taken profits on Broadcom. I completely sold out of Broadcom at $298. I made, I don't know, 65, 70%. Methods, what's going on, bro? How you been? It's all right. You guys, it's fall's approaching. Winter's approaching. You guys will likely see me at least once a week, probably twice a week. Remember how often I was streaming during the winter? There's nothing else to do. In the summer, I usually go to Europe for a month. So if you're wondering where I've been, I usually go to Montenegro. I go to Albania, where my roots are from, and I stay there for 4 weeks, sometimes 5 weeks. Last year, I was there for 2 months. So that's where you guys haven't seen too much of me. But now I'm back. Summer's wrapping up. You guys will be seeing me live much more often. So no worries there, all right? For some reason, I've been having some computer issues. I don't know what's going on, but nice and easy. So far, so good on tonight's stream, at least. Guys, SoFi, I don't own the company because I can't model it. It's just too difficult of a business model for me to model with how they make money. But I will give credit where credit is due. They have been crushing it. If I can show you guys here, I mean, just take a look at their last report. I mean, they knocked the cover off the ball. Where was it? I mean, dude. All right, so beat by 2 cents might not sound like a lot, but when you're reporting 8 cents in earnings per share, it is. But 858 million was 44% growth, and it beat by over 53 million. And they increased guidance, so gotta give credit where credit's due. Star Kitty, I invest nothing for the short term. Why exactly is SoFi so hard to model? Shovel off the tennis courts? Dude, hopefully it's not too much snow this year and I can keep playing until November like last year. I'll show you what I mean. NBL, what's going on, man? Are you the guy who I made good money for when you asked me pick, like, you asked me to make a pick, like red or blue or like black? I think I got it right for you. You said I made you like $400. I think something like that, man. Oh, my bad, Dan. My bad. I got you confused with someone else. Let me show you what I mean. I'm a dev working DeFi. Got an invite? Anyone? Bell, I'm not sure what you're trying to say. Oh, Domo and Celsius. Celsius has been ripping, man. I agree with you on Celsius. Domo, I think I remember telling you I didn't know much about it because I still don't know much about it right now. Let me show you exactly what I mean, though, regarding why it's a little hard to model. So look at the different products here, okay? Money includes checking and saving accounts held at SoFi Bank, the Invest division, credit card, refer loans, Relay, at work, okay? It becomes really hard to differentiate how they make money on the lending, on the technology. By lending, originations and average balances, lending products. Let me show you here. Okay, here's their income statement. Securitization and warehouses, okay? Deposits, corporate borrowings, loan and securitization. Non-interest income, loan origination, sales, securitization, and servicing. Technology products and solutions, loan platform fees. Then you have to model out provision for credit losses. It's not easy, man. It's not easy. Then you have to, figure out their expenses, right? From a tech and development standpoint, from a sales and marketing. There's a lot of variables here, okay? So it's just difficult. It's difficult. A-Lab's a solid company, in fact. I think maybe a little too expensive now, but I do like A-Lab. MSTY, not a fan of. Will, what's going on, man? Are you still in a bull... What are you trying to say here, man? Are we still in a bull run? I do still think we're in a bull run. I do think we can see some rockiness next month, though, on the potential Fed rate cut. All right, let me get some of these names down. Chastity, what's going on? Love the content. Have I ever streamed with anyone else? No, I haven't streamed with anyone else. Just me. I'm a one-man shop. I've never done any, like, co-streaming. It's just always been me only. Method, I'm going to agree with you on the trim there. Rafa, I think Palantir is too expensive. Let me see. I'm gonna see here. VSAT and Gyro and GLYP. Okay. Let's take a look at Bloom's numbers here. All right, Bell, you gotta get the fuck out of here, man. I don't know what the hell you're saying, dude. All right. GYRP I got there, right? GYRP? Oh. Wait, was that, Hold on a sec. Are these all related in some way? Roaming, I like Joby and Archer. I'm just not pulling the trigger just yet. They're still burning too much capital. The valuations are still a little too strong. If I invest in one of those two companies, it will probably be sometime in 2026. All right, so Bloom Energy. I mean, look at the numbers here. And I'm not very familiar with what this company does exactly. All I can do is lay out the numbers for you. Okay, 19 to 20% growth expected for the next several years. 29% growth in EBITDA this year, 60% the year after, 53% the year after that. Okay, talking some pretty nice growth here. Earnings per share expected to grow 79% this year, 65% the year after that, and then 59% in 2027, taking the multiple down to 34 times 2027 earnings. After that, there's only 3 analysts covering, so I really can't shine too much light on there. After this 100% gain, the stock looks a little expensive, but damn it, these are some impressive financial results. I don't like SMCI at all. Again, guys, I am only focused on long-term investing, okay? Oh, your financial advisor recommended this to you 2 months ago? Oh, shit. All right, let's keep going here. What's in the Ives ETF? Oh, Wedbush. Yeah, and Ives. So there's probably going to be a ton of Tesla. How much Tesla are we talking here? Oh, actually not too much. Only 4%. NVIDIA, Oracle, Broadcom, TSM, AMD. I mean, why not just rock with the QQQ? I mean, what, you know, like, what's the performance difference? They're damn near neck and neck, you know. Ives at 7.6, QQQ's at 7.1. Ives launched on June 4th, though, so way less track record. So they're almost identical. What's really curious, though, because that's not taking into account fees. Ives ETF. .75%, okay, and then QQQ is 0.2%, so 0.5% difference, and that's essentially right there, the 0.5% difference. It's just pretty much the same thing. It's pretty much the same thing. Let's talk ECL here. Oh, ESL rather. ESL, right? What the hell was it? ECL, my bad. ECL. Ecolab. I'm not familiar with this company at all. They've been running nice. Just real quickly, what do these guys do? Water treatment, sanitation solutions. Pest elimination. Okay. Would sizing matter between the two ETFs though? They look very similar, dude. Even weights. For example, I own the IVV, right? Which is Corey mentioned the VOO. Same thing. except VOO is owned by Vanguard, IVV is owned by BlackRock. Same product, SP 500. But I also own additional Microsoft because I believe Microsoft will continue to outperform the market as it has been. You can do something along the same lines. Joe, I'm not an options guy, my man. So I'm a long-term investor. So good luck to you with your calls. I'm not your guy. I have all VOO ETFs. Any suggestion for stock? There's no way I could say to user, you'd have to join Cube. You have to go to my website, click the link in my bio, join Cube. We hop on a 2-hour Zoom conference. I would love to walk you through my holdings. At the end of the day, you do what you want. But I have a lot of ideas for you, and then you can do your own research after reading my research, seeing my models. But without knowing your risk appetite, your goals, your age, there's no way I could say anything like that, man. I'd never pull the trigger on TMDX, no. Corey, I like your thought process. I don't think SMR is the best name in nuclear, though. Coin, I'd rather just own the crypto outright. Rich Tech Robotics, I have no faith in. Method, you're out of here? Take care, brother. Good seeing you. ECL looks like a modest grower. 2% this year, 5% the next couple years. Abdul, don't like SMCI either. Sorry, man. EBITDA 23 times, so 8% growth looks healthy. 38 times earnings? Come on, man. That's too much. That's too much. Lethal, I don't know Jack Henry. Motivating, we went through SoFi. SoFi's numbers are very strong, man. I don't want to talk about SoFi too much because I've been mentioning it quite a bit. Jake, I don't know Amprius's battery technology all that well. I follow Enovix a lot closer, but I am so skeptical on these next-gen battery companies. I really am. Because the issue is not even so much in the technology. It's more so in the scalability. You can make a great battery. You can make a dozen of them. Can you make 5 million of them and keep the same, efficiency? Iowa, it depends how you feel about the economy, really, and discretionary income. Chris, I think people are nervous about the Jackson Hole Summit this Friday that Powell's going to speak at. Yeah, I like Fiserv, Lethal. I like Fiserv. Andy, what's going on, man? Sheepa, what's happening, bro? I know that last name for sure. Thoughts on 20-year-old investing only in VTI? That's not a problem, man. That's not a problem. In fact, you can afford to even take more risk if you wanted, but that's a completely fine place to start. No, good seeing you, man. Good seeing you, bro. I'll see you in the next stream. No, you need. Are you on my free weekly newsletter, man? If you are, make sure to join. If you aren't. Yeah, Andy, that's solid, man. That's solid. I am not, Chris, I am not buying Palantir at these levels. What's your thoughts on what Powell will say? I think he'll lean slightly hawkish, but he's not going to give any indication to what he's going to do on September 17th meeting. He knows he needs a little bit more time to digest that. I really don't think Powell knows yet if he's going to cut just yet. Corey, I've heard a lot about Buc-ee's. I'm here in Jersey, man. We don't have those around here, but I've heard good things about Buc-ee's. Any fintech stocks, I like it all. Yes. But usually they are embedded within a larger company. So you could say technically I'm invested in 3 or 4 fintech companies, but fintech is a part of their business, not their entire business. If I'm going full-blown fintech only, I'm keeping tabs on 4 that I doubled my money on already. I'm keeping tabs on that for a potential re-entry. I'm also watching Adyen. I like ETH, ZB. I am invested in ETH. I made 10x my first time around. I'm now back in at 2,300. Okay, Andy. I mean, those are 2 solid names there, man. I mean, I would personally diversify a little bit more, but to each their own. Like in my brokerage account, I have about 25 names. I don't like Neo at all. Tom, I don't know what Murphy USA is. Thar, I'm not familiar with either. Dan, I still like Chipotle longer term, but they are going through some headwinds right now. That same-store sales growth that they just printed was not very healthy, man. And I can't give out my names that I like publicly I that's what I do for a living, man. I have 200 clients that I help with that kind of stuff. But and I'd love for you to be a client of mine as well, to give you some interesting ideas. But what I would say is if you're not ready for that, look into maybe some robotics companies, geospatial intelligence, fintech, as we were discussing. There's some interesting software names out there too. I would diversify into utility companies. There's some interesting plays in pharmaceuticals and med tech. There's a lot right now going on. Depends what kind of sloth. Depends what kind of tech we're talking about. Oh, they own Quick Check. Very cool. Yeah, Quick Checks are all over the place. I wish Wawa would go public. Motivating. I think Reddit is more than fairly priced now. I was banging the table at $100 a share because I have it modeled. I don't know if you guys. I already went through it earlier. When you join Cube, right? If you subscribe to the red plan, which is the middle one right here. If you go with blue or red, you get access to my models and my research reports. My Reddit model is right here. So you can know what my price targets are there under a base case, a bull case, and a bear case scenario. I think most AI tech companies right now are in bubble territory. I think I found one that no one's talking about that's going to have a massive 2026, though. That's been sleeping under on everyone's radar. And I am loading the boat on it right now. Nick, any progress on letting us buy some individual models at some point? Yeah, you'll likely see them on my website in September, dude. Right now, I've been slacking on that a little bit because I'm working on a 100+ page research document and models for my subs. So once I get that out and deliver to them, I will focus on putting these models as one-offs on the website. Ryan, I know nothing about cognition therapeutics, man. Dan, a cruise ship. That kind of boat. It's a name I'm so excited about. It's an AI tech, and it's like no one is paying attention to it. Chipotle versus Kava, what you picking? I would take Kava right now. Here to scroll. STEM? Nah, man. I've gotten burned on STEM. I don't trust the company anymore. I don't know Thar stock at all. I have no idea what Thar stock is. Jada, my pleasure, my pleasure. I have a Cube sub that loves Rave. He loves it. $47 million pizza stock. Yeah, I don't know what he... I think maybe he lives near one. I'm not sure. Sloth, I have no interest in Intel. And in fact, I think the government potentially taking a stake in Intel is so anti-capitalistic, I hate it. I hate it. Guys, really quick. Ruben, yes, I am looking forward to our quarterly meeting, man. Here's what I'll do. I'll add Thar stock to the list. You can load it in your canoe, Dan. Yeah. Yeah, but usually, Nick, they took on that ownership in the midst of like a financial crisis of some sort. You know, like Intel needs help in the middle of an AI boom where everyone's making billions upon billions of dollars. Like, like, no, man. There's so much money on the sidelines for AI. Let private equity, let other AI companies pick up the pieces if Intel's that poorly run. There is zero reason for our tax-paying money to invest in Intel that we know we're probably not going to get our money back on. Think about the AI boom right now. And anyway, like, you know, it's if you're looking at Intel from an investor standpoint, this is essentially what you're trading. They were supposed to get what, $5 or $6 billion worth of CHIPS Funds Act money. Okay. Now it's no. We'll give that money, but we want a stake in the company. That's dilution now. That's just straight dilution. But look at SoftBank putting $2 billion into Intel. Let the private markets do its thing. It's the same reason I've been hell-bent on why we should have never bailed out the airliners during the pandemic. There's plenty of cash on the sidelines. There's $8 trillion in money market funds. There's so much money sloshing around. Intel should not need a government stake and investment during the middle of a $1 trillion AI boom. It's just ridiculous. I would take J&J over UNH. It's 7 or 8 trillion lethal. At this point, I don't even whatever. I don't know anything about iBio. Oscar, Jacob, same reason I don't invest in UNH. When I don't know what the future looks like with regard to legislation around healthcare, I can't pull the trigger. CoreWeave, not a fan. Sloth, I completely understand you don't mess with private equity, but I just don't like the idea of America taking a stake in Intel. Isaac, I love Microsoft. I think it's the best Mag 7 there is in the market. I think I'd rather the government use our money to take ownership rather than handouts. I get what you're saying, Nick. I get what you're saying. It should honestly be a loan then. Make it a loan as opposed to handout. Make it a loan. But I just don't see why there even needs to be funding there. Like, let Intel issue a 30-year bond then. But my concern is, bro, Intel just doesn't have the tech capabilities to even compete with TSM. Do I love Apple or Qualcomm? You're saying which one I like more? Oof, I don't like either right now, man. But if you made me pick, I'd take Apple over Qualcomm. I don't like Open Doors business model. Forgive student loan debt. I hear what you're saying, man. I'm not familiar with Verb, but we can add that to the list with Thar. Winners, what's going on, man? Good to see you as well. Thoughts on Palantir? I think too expensive. Thoughts on Lucid? Long term? I don't see a path to profitability. Do I think we're in a bubble? I think there's pockets of bubbles in like AI and tech. Do I think we're, are you talking about like a real estate bubble, a general market bubble? I wouldn't say we're in a general market bubble. I would take Novo Nordisk over UNH personally. I do like Tempest, Sloth. I want it lower though. Okay, let's see what we got here with Viasat. Before I get into this list here, guys, really quickly, again, I'm going to ask you guys, please throw the page a follow if you like long-term investing. If you do, I'm your guy. I go live at least once a week. I've been doing this full-time for 8 years, okay? And I have many answers. So I post all my live streams, okay, after the whole entire recording. You could check my receipts. I think if I sucked, I wouldn't be able to do this for 8 years. Now, Conchits, you asked an interesting question about do I invest in livestock? No, but there's some interesting ETFs out there to do that. You guys say, like, how the hell does this guy know so much about all this stuff? It's actually, let me see here. Is it DBA or DBC? DBA Holdings. Let me see here 1 second. Is it DBA or DBC? DBA owns soybean, corn, lean hogs future, feeder cattle, hard red winter wheat futures, things like this. Number 2, cotton futures, cocoa futures, and live cattle futures. So if you actually wanted to actually own a ETF that does this, DBA would be one of them. Cube actually has the first AI brain implant. Appreciate that, man. Well, when you do this 8 years and you have 200 plus clients and they're asking you a million questions throughout the day, when I go live for you guys, I get a lot of these questions anyway. So I've done research on so much of this stuff. Just really quickly, I want to see what DBC was. I think that's more commodity based. DBC Holdings is, yeah, more commodity based. And this one owns crude oil futures, light sweet crude, Henry Hub natural gas, gold, silver, soybean, corn, wheat, copper, aluminum, zinc. So this is DBC. You know, because if we do run into a stagflationary environment, this is probably where you can run to hide. And that is a concern that I do have. This is what that chart looks like. Been kind of sideways lately after a big run in 2021, obviously due to inflation. And then DBA, I think, has been performing better. Here you're looking at, yeah, just steady up and to the right. So just something to put on your watch list. Obviously, I'm not telling you what to buy. I cannot do that. But you asked, am I invested in livestock? I said, no, I'm not. I didn't want to leave you hanging. So I wanted to say, hey, if you're looking for some way I can help you, put this on your watch list, man. I hope that was worthy enough to earn a follow. And that's why what I was getting to is, please throw the page a follow. If you'd like, I would love for you to join. I write a free weekly newsletter every Monday morning. It's issued at 8:30 a.m. Eastern Time, unless it's a holiday. If you guys would like to be on it, I cover the markets. I give my insights on things, all that kind of stuff. Analyst upgrades, analyst downgrades, important economic data that's coming out, important earnings that have happened over the week, analyst price target changes, all that kind of stuff. I am a fan of AMD. I think their MI300s can win some market share from that of NVIDIA, along with the MI400. TSM, I still think deserves to have multiple expansion. Now, the reason, like, you look at a name like TSM, right? Okay. You got this name still going to grow revenues 37% this year, 15% the year after that. It's trading at 11 times EBITDA on 36% growth and 19 times earnings. Now, here's my whole thing. Market's saying, to what I'm gathering is, the market's saying, hey, we can't give you a 35 times price to earnings multiple, mainly because of the geopolitical risk of being so close to China. But to that, I would say, TSM has the same risk as AMD, NVIDIA, and any other fabless player. It's the same risk. Whether China were to invade Taiwan and TSM has to hit the button on their explosives of their manufacturing plants, they all share the same risk. TSM has the same exact risk because NVIDIA can't go to anyone else. NVIDIA can't go to Intel and say, hey, I need some Blackwell GPUs made. They don't have the capabilities. Then I go ahead and say to myself, well, hey, look, TSM still being valued at 19 times earnings because of geopolitical risk. Look at the inroads they're making within manufacturing in the United States. That kind of de-risking and building within the United States should lead to some kind of multiple expansion, meaning, okay, instead of a 19 times forward multiple, maybe they should go to 25 to 30 times. I believe TSM should be a $1 trillion plus company. I truly believe that. So it's at $970 billion right now, which isn't saying a whole lot, but I believe it deserves to be in the $1 trillion club. Because these fabless players share the same risk. Because there's no one else to go to. All right? Charlie, I have no interest in United Health. Would you say most of the names you pick are big names or under the radar, nobody knows? Most names are under the radar, nobody knows. But, I mean, don't get me wrong, Lethal. Like I mentioned to you, I've made great money on TKO. I've made great money on Broadcom. I've made great money on Microsoft. Don't get me wrong. I own 25 to, 28 different companies at a time. But, the average Joe is not going to know probably 15 of them. So, what's going on, man? So, my thoughts on Monday.com. Took it on the chin on earnings. And I think what people are concerned about, someone said, are you nervous at all that AI might hurt some software companies? I think Monday.com might be in that ballpark of names that could see AI threaten their business. I still think the stock's a little too expensive right now. Tomislav, what are your thoughts? What do you think about Rheinmetall as EU announced further investments? I like Rheinmetall. I do. And Ronnie, nice buy on TSM. Tucker, I'm actually not following the Fannie Mae Freddie Mac story at all to provide any color. Relay, CrowdStrike, we went through it earlier. I don't feel like paying 50 times 2030 earnings. I doubled my money on CrowdStrike already. I have now moved my money to a different cybersecurity company that I think is undervalued and will perform well. I've done really good in cybersecurity in my day. Did really well in Carbon Black. They got bought out. Did really well with CyberArk. Should have freaking held because they just got bought out by Palo Alto. Did really well with CrowdStrike. And now I'm in my fourth different type of cybersecurity company, hoping to repeat again. Laser, absolute fucking awful company. Next month is my 1-year anniversary of streaming live on TikTok. I've been saying since day one, if you want to go and find the receipts, Laser is an awful company that will continue to bleed. The CEO is an awful CEO and founder. He's been outed, by the way. And I said they will continue to dilute and maybe even face bankruptcy in 12 to 18 months. That is looking extremely, extremely likely. It's almost as if I had a crystal ball. I would avoid Laser. There are far better companies out there, man. You guys need to join Cube, man. Oh my God, you guys need to join Cube. Oh man, there's so many names I want to tell you guys. And some of you guys, You're like, you'll mention names. I'm like, oh man, you're so close. You're so close, but but yet so far. We were talking about Luminar Technologies, Catherine. Good to see you. Marvel, I'm so interested in Marvel because I love custom integrated circuits. Ultimately, I went with Broadcom. Marvel has an opportunity to really shine, but I am concerned that the Trainium 3 contract from Amazon might go to Broadcom. And if that does happen, it's going to be detrimental to Marvel. Marvel is the little brother in this space, and Broadcom's just the older brother bullying him around. They're still doing a good job, but there are some risks out there. What are prices on your website? My base plan right here is the green plan is only $40 a month. The red plan is $75 and the blue plan is $200. I'm letting you guys know though, after Labor Day, all the prices are going up, but only for new members. So if you subscribe before Labor Day, you are locked in. Your price will not go up. Okay? Ondas, no, I don't have enough trust in that name. I think there are better unmanned aerial system companies out there. This is exactly what I mean. You guys get so close with some of these names you're mentioning. I just think there are better competitors. What are your thoughts on the portfolio? VOO, IJR, IWF, IWD, QQQM. Not bad. You got a decent amount of overlap, Malik, but not bad. I like that you're diversifying, and you're rocking with the ETF route. I still like QQQ. Maybe get a little frothy here, but still like it for the long term. Recursion, Sloth, not following closely enough. ASML, again, if you subscribe to the red or blue plan, you will get my models. I have ASML's model right here. Lilly, I still like, although I was expecting better oral drug data out of them. I do like Waste Management. 30 times earnings, maybe a tad expensive, but I still like them. Plus, I like their Stericycle buyout. I think that was a smart move. I actually think I have that modeled here too. Where is it? Boom, right here. Waste Management, discounted cash flow model. Letha, no, what I was talking about, well, there was a LiDAR company mentioned. We're talking about Luminar. That's what I was talking about right now, Luminar. And how I think they're going bankrupt. But this other guy asked about Ondas and unmanned aerial systems. And then I said, you're getting close, but there's a competitor I like more. No, it's not bad overlap, Malika. So, like, for example, you have let's see here, IWF, right? Let me see here if memory serves me right. Russell 1000 growth. Okay, then you have the IWD, which is 1000 value. I like that. And then I think you had IJR. S&P small cap here. That's not terrible. You have a little bit of the QQQM and your VOO are very, very similar. Very similar. The QQQM is a little bit more tech heavy, but like the top 10 names are very similar. If I can show you really quickly. QQQM. And I'm not saying it's a problem, but I also don't know your weights in each one. If you look here, NVIDIA, 10% weight. Microsoft, 8%. Apple, 8%. Amazon, 5%. Broadcom, 5%. Then you go with VOO, and it's same thing. NVIDIA, 8%. Microsoft, 7%. Apple, 5%. Amazon, 4%. They're very, very similar, but the QQQ and QQQM are slightly more tech heavy, that's all. I don't like any quantum computing companies right now in the market. I don't trust them enough. I just don't. I think the best quantum computing companies are private, and I just find it hard to believe Rigetti and Quantum Computing Co. and these names and D-Wave are going to be able to eat up market share when you have names like Google and Microsoft and Amazon with their own quantum computing chips. I think if it was that close to the forefront right now, I feel like Amazon and Apple, Amazon and Google and NVIDIA and the like would be pushing harder. I just think it's still a ways out. Chevron's not a bad name. I do like Exxon more. Costco, not bad. I think a little expensive. Believe it or not, what I am eyeing up big time here is BJ's Wholesale, believe it or not. Catherine, I don't really like BMNR. I would rather just own Ether outright, which I do. SPMO, if I'm not mistaken. S&P 500 Momentum ETF, I'm not against it. Small caps, I don't mind. They still have not really broken out. I handpick my small caps, though. And I do outperform the IWM, which is a small cap Russell 2000 ETF. So I prefer to handpick my small caps. All right. Oh, my goodness. Okay, let's keep going here. Lunar, not a fan of. BAC's okay. I like BAC. I like JP Morgan. I like Goldman Sachs. MP Materials, I gotta say, I do like. They're very well positioned. CLS is Celestica, I believe, right? Solid name. I believe it's pulled back a little bit. I've also been watching like Fabernet, Benchmark Electronics, things like that. Catherine, I don't like Lulu, even though the valuation finally looks attractive. I'm just concerned about a pullback in consumer discretionary spending. $100 leggings are usually the first thing to go. Did you have a mentor? How did you learn? User, great question. I went to school and got my degree in finance. I worked for a little bit at Merrill Lynch, worked for a few more years at JP Morgan. I got my series certifications, although they have expired, and I've been working for myself full-time for 8 years. Plus, I am an avid finance book reader. So, yeah. That's where my background is. Don't let the baby face fool you. I'm turning 32 in a couple months, so I've been doing this for quite a bit. Tommy, appreciate you, man. Okay. Yeah, JP Morgan was cool. Met some cool people. Any concern how quantum computing will affect crypto blockchain? Yes, Barry, that is a risk out there that it could crack the blockchain. But I do think that's still 10 to 15 years potentially out. And there's still plenty of time left in that case of this game of musical chairs. Let's see here. Celsius, I like Celsius. I would say now after this run, maybe a little expensive. Do I think FIG has gotten attractive? No, winners. I need it lower. Plus, I always want to wait for the lockup period to expire to see what insiders do. Do I ever sell cash secured puts? Once in a blue moon. I am a much bigger fan of selling covered calls. I am not familiar with Lennox stock. Look at the income ETF on Bitcoin. Was that passing along dividends after rolling futures contracts? I'd rather just own the crypto outright, my man. I am very diversified, Lethal. I would say I'm a growth-oriented long-term investor. I don't have Falco. I don't have a favorite quantum computing stock. I don't like most of them. AppLovin, the short ports scared me, man. I gotta say. Yeah, my experience is not bad. There's more people with experience than me. There's less people with experience than me, but yeah. I think definitely enough to talk and stream. Enough experience to talk and stream. I'm not Salt. I like Coke. Let's see here. What's your biggest win? Percentage wise or dollar amount? I actually just mentioned Fabernet actually. Motivate. I just mentioned App. There's a few short reports out there that kind of spooked me from App. Percentage wise, it's actually Ethereum. I bought it at 300. I sold it 4,000. I am now back in at 2,300 though. So Ether is my biggest percentage win. Sloth, I own CEG through my utilities ETF. Nvidia before earnings, they'll knock the cover off the ball. I just think it's gonna end up burning options players. It's like implied volatility, dump. Let's see here. I do like AMD. Tommy, I appreciate it, man. I born early. I mean, you're calling me old, but sometimes I'm like, damn, the 50-year-olds really had it nice. I already sold Take-Two, brother. I did great on Take-Two. My average was 140 something. I sold at 230. I don't feel like waiting another 10 months for GTA to come out. Do I like chemical companies? I don't really follow the space close enough. Brayden, what's going on, man? Motivating. I'm going to say it for a third time. I'm not the biggest fan of AppLovin right now. Please. Please. You've commented it 8 or 9 times. I've answered it 3 times. Hey, Brayden, congrats on your internship, man. I am invested in several mid-cap tech companies. Yes, I am. You have to join Cube to know what they are, though, man. Five Below, not a fan of. XYZ, I'm going to pass on XYZ. Lethal, I'm going to pass there. I'm really not a fan of Dorsey, to be honest, dude. Let me add RF to this list. We'll look at RF. Bryce, I like AMD. Personally, don't like Tesla. Salesforce is getting attractive. It's getting interesting to me. Lethal, I would say skip both WBD and Disney. I would skip both. I hate Warner Bros. Balance sheet. Disney, I think, is screwed with ESPN. I think they're cooked on that front. Nick, any concern? My concern with Qualcomm is vertical integration from Apple. That's my concern with Qualcomm. I don't know TNXP. Micron I like. The only thing I ask you guys not to confuse with Micron is don't look at their earnings multiple and say, oh, well, NVIDIA trades at 35 times earnings, so should Micron. Micron is in DRAM and NAND markets. Okay, those are memory markets. They're way more cyclical. You're not going to see Micron trade at 35 times earnings. It's not as secular of a business as like GPUs are right now for NVIDIA and their CUDA software. What do you look for in a balance sheet? I mean, healthy cash levels, moderate debt. A big thing you want to look for on a balance sheet is accounts receivable. Make sure they're collecting their money, man. Keep an eye that accounts receivable growth isn't outpacing revenue growth too much. Otherwise, they have a collection issue. That's something that not enough people talk about on the balance sheet. Meta, I placed it maybe number 4 on my Mag 7 list. UPS is not a bad name. I actually prefer FedEx, though. Gold miners, I've been looking into gold miners as well. We've been talking about it in the group chat, actually. ANET's a solid name. I like ANET. Good earnings. When do you review stocks? Doing it right now, man. Don't... I'm out here losing my breath and getting lightheaded talking about them. When do I review them? It's happening as we speak. Hey, the main event was a bit of a snooze fest, sure. I mean, I thought it was crazy how you can manhandle something like that. But the 2 fights leading up to it, bro, 2 back-to-back spinning back fists, back elbows, are you kidding me? Michael, go ahead, man. Shoot. Jimmy, I actually like Melly. I do like Melly. Paulie, I think Palantir is overvalued. Winners, I do like VRT. We'll get to it. I got to get to these other names first. Let's talk about VSAT. I do like Wix, but I need them to refinance that debt first. Lethal. JC, good evening. How you doing, man? Long time no see. Oh, Viasat's been running lately. Okay. Was that Viavi? Dude, I looked at Viavi so long ago. That stock just doesn't move, man. Been well, brother. Portfolio's up 37% this year. I'm a very happy man. My long-term gems have been performing extremely well. I'm very, very happy, man. And then outside of that, life, which is obviously way more important. Family's healthy. Everything's good, man. Cannot complain one bit. All right, what do we think about Lung, Allo, and Microsoft? Mike, I know nothing about Lung and Allo, but I freaking love Microsoft, man. I have a model on it that I issue to my Cube subs, and the recent earnings report, no joke, added $30 or $40 per share to my model on my base case valuation where I think it belongs to trade. I think Microsoft had easily out of the 6 that reported so far, because we still have NVIDIA, easily the best earnings report out of all of them. Then why don't I marry it? Bro, I've been owning Microsoft for like 7 years now. I think that's longer than a lot of people's marriages. I've been married to Microsoft longer than many, many people I know, married to their wives or husbands. Oh, man. What are your thoughts on rate cuts and NVIDIA earnings? Vinny, I'm actually concerned a little bit about rate cuts, believe it or not. I think what the market's been doing here is pricing in a decent amount of the rate cuts to come. I think September 17th, which is when the Fed meets, could be a little bit of a sell the news event. Okay, so add some choppiness to the markets that's been kind of gone since the tariffs. And then my bigger concern is that October and CPI prints thereafter, if we do indeed cut, come in a little heavier than expected. And then we're left with the question of, can we still cut to a 3% terminal rate on the Fed funds? Okay, and ultimately, are we in a stagflationary environment if the continued jobs reports are weak? So that's the type of concerns I have when I'm looking at the back half of this year here, and also why I've been slightly moving further into cash lately or into safer investments like utilities, for example, just to protect myself. Okay, will the Fed cut rates? Sloth, as it relates right now, there's an 82% chance, according to Fed Funds Futures, that the Fed is going to cut rates 25 basis points on September 17th. Okay? I have the Atlanta Fed figure I have so much trouble trusting. I really do. I like Visa more, Leith. See, Vinny, that's another thing too. If we don't cut, it's not good either because the market's pricing in cuts. So it's like a damn if you do, damned if you don't environment, Vinny, heading into September 17th, which is why I'm a bit concerned about maybe some near-term volatility. Futures. What are futures doing right now? They are looking pretty flat. Pretty flat. Not much going on. I bought Microsoft 518. You think I should keep it or cut my losses? Mike, I think that stock do kind of like set and forget for a long time, dude. I'm not a trader, my man. I buy and hold stocks for a very long time. I know it's not very common on this app. Most people are day traders on TikTok. I'm not that guy. You're not that guy, pal. I'm a long-term investor, man. Materials or utilities? Braden, give me utilities. Robert says, I want to put all my favorite stocks. Never have enough money. I feel you, man. Never enough, right? I think 5-8. I think there's just a little bit of jitters heading into the Jackson Hole conference on Friday, where Powell's going to speak. I do own biotech, Michael. Yep, I own 3 names in biotech / medical devices, and I'm eyeing up a 4th one that might find its way into my portfolio soon. So if you do want to know what those names are, hit the link in my bio. Join Cube. I won't go at BIIB, even though I do think it's due for a rebound. I'm handpicking my names in that space. I own UEC through an ETF, NA. I'm too afraid to take single stock risk there. Bro knows ball. Appreciate you, Santa. Appreciate you. OTO was a major issue, and he's no longer with us. Which is upsetting. What are you gonna do? Let's see here. What's ahead of Meta for you in the Mag 7? Microsoft, Amazon, Google, in that order. I like Energy Transfer a lot, along with Enbridge. I like the midstreamers, Lethal. UNH, the only reason I'm not pulling the trigger on UNH, despite Buffett buying a stake, is I'm just nervous about legislation in healthcare. I don't know what that looks like. I'm too in the dark. It's Powell's job to watch labor market over inflation. Well, he's trying to balance it too, right? The Fed has a dual mandate. So he has to ask himself here, am I more concerned about a contraction in jobs, or am I more concerned about stoking inflation? That's the conundrum we're in right now, guys. That's exactly the conundrum we're in. TSM, Braden, TSM. All right, let me just keep going here. All right, what's this? Is it the guy that asked about these 3? What? Gyro, GYRP. What are these? GYRP. Gyro, Gyrodyne LLC. $23 million market cap. Come on. GYLP. I don't even know what the hell these tickers are, man. Let's go Thar. Theramune. $16 million fucking bullshit. Good God. Verb. No offense to the guy that asked about it. Verb Technology. Alright, at least it's a $1 billion company, but damn, this is an ugly chart. Yeah, guys, sorry, I don't talk about these nano cap stocks, and I don't want any possibility. $5 million in revenue? Come on, man. Come on. What are we talking about here, dude? My dad's car washes combined do more than that, man. Come on. RF. Let's see here. RF. Regions Financial. Iron. I'm not against Iron. Iron's got good financials. GMAB. All right. GMAB. And then what was it? HRMY. Guys, I just hit the 2-hour mark. I don't know where 2 hours goes. That is insane. Here's what I need from you guys before we wrap up this list tonight, okay? I need to make some really key notes here. Number 1, please throw the stream a follow. Car washes are a great business. My father made a great deal in the business for 30 years, okay? Fantastic business to be in. So number 1, yes, please throw the stream a follow. Number 2, guys, I write a free weekly newsletter, okay? Here's what it looks like. All right, I issue it every Monday morning at 8:30 a.m. Eastern Time. I break down, what's been happening in the market. I go through a couple of major stories, macro-related and then micro-related, okay? And then I give you easy-to-read, quick bullet points of what happened during the week, all right? Along with company earnings reports, how they performed, did they beat or miss estimates, notable upcoming earnings reports, recent Wall Street price target changes, detailed Wall Street commentary that I have from paid subscriptions. So I give you guys insight into this stuff. I do a fun quiz every single week. I do the Cube calendar, which is things you need to keep an eye on for the upcoming week. And then I just find some interesting charts throughout the week as well. This is free, guys. It is free. Please just go to my website. It's literally, if you go to like my TikTok, okay, literally you can get on it right here by clicking CubeWealth.com. So when you go to my profile, click CubeWealth.com. CubeWealth.com is going to take you to my website, which is right here. There's a tab right here that says free newsletter. Simple. You don't even have to put your name. If you don't even want to give me your name, don't give me your name. The only thing required is your email address. Okay? And you will get it. Just make sure you check your spam or promos folder every Monday, because the charts I include, sometimes send it to spam because there's so many JPEGs in there. Okay? Now, if you're trying to see all of my holdings, what I'm so excited about, how I'm up 37% this year, things I'm still planning on holding for another 5 years, spanning robotics, geospatial intelligence, artificial intelligence, software, energy, utilities, all this kind of stuff, and you want to be in the know, and you want to get my models, and you want to get my research reports, and you want to get all this kind of stuff, check out my plans. And I'm telling you guys, just as a heads up, prices are going up on the subscriptions right after Labor Day for new members. So if you get in before Labor Day, your price is locked in, your grandfathered in, your price will not go up, okay? Guys, thank you so much. Appreciate you. Brother Jacob, I sent you an email last night. Make sure my email, Jay, I sent you an email. And I actually think I put you on the newsletter. Make sure my stuff's not going to your spam, brother. I actually sent you an email last night. Just double check your emails, man. Maybe my help at CubeWealth handle is going to your spam or promos inbox. Double check that for me, please. And guys, there's no terms. If you don't like it after a month, we can part ways. Okay? It doesn't happen. I've been doing this for 8 years full time. It's very rare someone joins and leaves. And by the way, all of the plans come with an initial 2-hour onboarding meeting. Okay? We do a Zoom. I walk you through my portfolio. I told you guys, you get my research reports on specific companies. I issue new ones, either multiple models or one research report with that's 30 pages long. You get my annual outlooks, my quarterly and second half and first half reports on how my portfolio is performing. Like, guys, I spend a lot of time creating content, guys. All right? Like, a lot of time. So, no one else does this. I'm telling you, no one else does this. I really dedicate my life to this. All right? Do I like Adobe? No. I think competition's actually making an impact on Adobe. JC, I'm glad you're getting the emails. Okay, can we look into JKHY? Sure. Fiscal note. What's the ticker on that one? Sperry, my pleasure, man. My pleasure. Look, I'm trying to help you guys as much as I can just for the heck of it, right? I enjoy these streams. I love talking about the market. It's my passion. I cannot give you guys everything for free because, dude, these things make me a lot of money. They make my clients a lot of money. I can only give you guys so much for free. So if you do want to know what I own, unfortunately, unfortunately, but fortunately for me, you'd have to become a client. That's all. I have to draw the line somewhere. I say this all the time. If I was giving you guys my names for free online, can you even really trust it? So many guys that do that, I feel, are just trying to pump their names, and that's how they make that. I don't need you guys to pump my names for it to go up. It's going to go up because of growing their business and earnings per share are growing, things like that. Corey, yes, we do have our quarterly meeting Tuesday night. I'm looking so forward to it, man. I can't wait to see how that portfolio is performing. And yes, None of us thought Paramount was winning that UFC deal. That caught me by surprise. The $1.1 billion annual deal, though, was exactly what I was modeling. Jay, I figured they were, man. I figured they were. So, absolutely happy to see that it was going there. Just make sure now I'm going to your primary. Cube IPO when? Who knows, man? But hey, never say never, right? Ticker's note. Okay. What else do we want to add to this list? Did I say? Oh, what? That's right. I missed Viasat. Let me go back to it, and then we'll pick up where we left off. All full port of Cube IPO. Appreciate you, Lethal. Appreciate you. Yeah, Corey. 8 years been doing this. Lethal. So the predicament that I'm in right now, and it's not really a predicament, but it's kind of a flaw in my business model, is that I probably have the bandwidth for like 50 more subscribers. And then the issue here is, what's the latency on this thing, guys? So some of you guys, maybe I'm getting the messages kind of late because some people are responding to some things I've said like many minutes ago. King V, stick around for just 2 minutes. You caught me at a moment, I guess. You think that's funny. Stick around for 2 minutes. You'll see the difference here. What I was making the point was, just to come back full circle here, I don't talk about my names publicly because I don't need them pumped by people to make money on them. They do well on their own because the business is growing, multiple expansion, you name it. The main reason stocks go up over the long term, earnings per share growth. Although I would argue you could actually say the growing money supply is also taking my names higher too. The M2 money supply is kind of doing that as well. But that's a whole other thing we can unpack. But so Lethal, what I was saying here is, the tough part about my business model is I only have so much time throughout the day. So I'm thinking the next stage of my business is going to be, launching maybe some kind of ETF or some kind of fund, something like that. I have to grow a team though and do all that stuff. It's late. M2. Yeah, we'll save the M2 talk for another time. Would you think that if you made your names public, it would actually affect the share price? I mean, dude, there's... yeah, I think it's possible, and I don't want to even run that kind of risk. Absolutely. Long last. What's going on, man? Dino, I'm a fan of... I'm a fan of AMD. Oh, see, yes, I'm still here for a few minutes longer. I got to wrap this up, though, because it's getting kind of late, and I crossed the 2-hour mark, and I start to get tired after that. All right. There's some lower cost ways now, Sperry. I am favoring though the RIA method, though, the RIA route. All right, let's see here. Viasat, you're only getting 3% growth here, so it seems on Viasat. What do you think about the stock market going to 0? Yeah, I'm very interested in the private equity space. I am. Hood, I like Hood a lot. I was shouting it from the rooftops, but now I think it's a little hard to justify the valuation a little bit right now. Although they are killing it. QQQI, I'm a fan. Yeah, Lethal. Yeah, SPY to 0 is a crazy thing to say. Steve, I'm not against Nebius. I do like it more than CoreWeave. I just hate how, like, when you're looking at the business, they have their AI space, but then they have Toloka and then they have Avride, and I just wish it was cleaner. 6 times EBITDA here on Viasat. 20 times earnings. What's the deal here with earnings per share in 2027? What's the deal here with that? This is a little confusing to me. Sal, I'm not sure, man, where it's going to go near term, brother. I'm not sure. For me personally, NVIDIA is not my favorite name. Let me keep going here. Viasat looks all right. Nothing too interesting to me. And I'm always wondering how they stack up versus Global Star, obviously Starlink, things like that, and then ASTS as well. I don't know what that's about, Nick. Yeah. What's RF again? Is the person who asked about RS still here? Regions Financial. Looks like your standard 11 times earnings bank. Looks like run of the mill. All right, GMAB. It looks like your It looks like your standard. If I can go back to it, it looks like your standard. Lethal. No. That's got. I know you. I know you have to be joking. I went to Rutgers University, man. I knew you had to be playing a prank on me. Cause I was like, BYU, not the Mormon shit again. That was a good one. Nah. You, I don't know what was going on through that span of time, dude. I'm not against that, OC. I don't like IEP, Jared. Don't like it there. Don't like what I see there. A-lit, fine. We'll end on A-lit. I was at JP Morgan. 270 Park Avenue. Crazy to think I started a decade ago. Good God, man. Where does time go? But I've been working on Cube full-time for the last 8 years. This is my company you guys are tuned into. All right. So, GMAB, 21% growth this year. You really like these pharma names, man. Let me tell you. And you find really quality ones, I got to say. 15% growth next year, 14% the year after that. 8 times EBITDA. What? I'm always left wondering why these multiples are so low, though, dude. Is there not a is there incoming competition? Is there, is there over the counter coming soon? Like, I'm just trying to wonder why some of these names don't trade at like large multiples. Oh, they're one trick ponies with one product. I see. That would make sense because you got 14 times earnings. These financials are strong, man. Even if you look at the balance sheet here. George, I'm not following the Fannie Mae Freddie Mac story enough. I'm really not. Fabby, same way I don't know anything about TNXP. Novo, the only reason I'm starting to favor Novo a little bit more is because it looks like they might have an opportunity in oral after Eli Lilly's somewhat weaker than expected results there. Fair stock has an amazing dividend. I usually don't like to give these things away. If you're asking for me personally, I like Realty Income. Cam, what's going on, dude? Dude, 2.9 billion in cash, almost no debt, and they've done a 1.1 billion in free cash the last 12 months. That's ridiculous, man. That's solid. JC, I don't think Vikings results are weak, believe it or not. I spoke about it for like 10 minutes earlier tonight. I actually don't think Vikings results are weak. I think they have a titration issue. They're one of the only companies I know that tested 120 milligram dosage. Novo's at 50 milligram, and Eli's at 36 milligram. And I just think that they ramped their patients too quickly on that, and that's why so many of them pulled out of the study. Viking Therapeutics is what we're talking about. The weight loss was fantastic, and I think there was also a really interesting piece of their study where they ramped patients on 90 milligrams for 6 weeks and then downed them to 30 milligrams for the remaining, what is it? It was a 13-week trial. So for the remaining 7 weeks, they downed them to 30 milligrams and they continued to lose weight. But what's really bugging me about the study, why did 13 or 18%, I'm confusing some numbers here, of patients that were taking the placebo discontinue the drug? You're taking a sugar pill. So I think with the smaller testing group and it being 13 weeks and the fact that they started patients off with such high dosages, I think social media scared some of the testing group, honestly. You know, I think it was 18% if I'm not mistaken. But like, talk about it getting in your mind, right? I am a fan of Grab. Right now, Chem, 82% chance Fed lowers rates next month. I use Schwab and Robinhood there, Fosky. Coherent earnings I thought were actually pretty solid. I don't think the pullback was justified. I do like Grab. I don't like Merck too much. Lululemon, I'm just nervous about consumer discretionary pullback and $100 leggings being one of the first things to go. All right, HRMY. Harmony Biosciences. Hims, I think a lot of the move in Hims is done. I do like Viking longer term, but like I don't really see much catalyst right now. Their phase 3 of their sub-Q form probably is not going to come out for mid-2026. The phase 3 of their oral, which will probably be a 72-week trial, is probably not going to come out to early 2027. So now I'm just asking myself what catalysts are out there. I think what's more likely going to happen, in my opinion, everything here is my opinion, is between now and then, I think a larger pharma company comes and buys them up. You got about a third of their market cap in cash right now, and say what you want, they're still a top 3 oral drug on the market. I can easily see them getting bought out. Dan, what's going on, man? Good to see you as well. Thanks for stopping by tonight. Yeah, JC, we're on the same page there. All right, interesting. So, HRMY's got 3 drugs in the pipeline, currently in development. That's cool. Okay, so this is a diversified biotech. So the revenue growth, man, upper teens, 6 times EBITDA. These look solid. Like is always the case here, dude. Braden, like, the numbers check out. It makes you wonder, are we just going to see mass consolidation in this space? Chem, I would say no to CoreWeave, man. How can you predict when something will get bought out? It's really more so a guess, Lethal. But the thing is, right, what I'm thinking of is, okay, you have a company in this specific case that is trading at a $2.5 billion market cap, $3 billion market cap, with about $800 million in cash on hand. And you have a situation where data was strong. Their oral drug is still a top 3 in the world right now, publicly known. And a lot of these, like Pfizer's, Bristol Myers, Merck's, don't really have anything going on in their obesity pipeline. And they see a massive 40% pullback like that. It's really a drop in the bucket for them, even at, a significant control premium. So, I think, like, you look at Pfizer at near 10-year lows. I think there's a reason behind that, and I think they're gonna have to pay up and start buying up some of these mid-cap pharma companies to beef up their pipelines. And it just looks to me like Viking is right in that threshold. Yeah, I would love to see Perplexity IPO. I don't like D-Wave, don't like GoodRx. Mara, I don't like. I'd rather just own the crypto outright. Thoughts on the CFA? I still think it's worth getting. 30% premium I think would be a little shy. If I had to guess, I think it'd be close to 50 to 60%. That's what I would say. But again, because it is pharma, and if you think about the size of that addressable market, and that it's bringing a drug to their pipeline like 4 or 5 years in advance, I think they'd pay up a little bit more for it. But it's tough to say. Oh, I don't know if Apple's going to buy them out, Jay. Yeah, the cash burn's not too bad. Do I like Quantum in general? I like Quantum, but not what's available on the market. Fosky, most of my options are done on Schwab, but I'm really not much of an options guy. Usually I just sell covered calls. That's really it. All right, Braden, good to know, good to know. Always a but, Daniel. Absolutely, always a but, for sure, when it comes to pharma. Yeah, but Apple's not really much of an M&A type, Sloth. Apple really doesn't really engage in it too much. Like their biggest acquisition, I think, is still Beats. I was in. I go to Europe for at least 4 weeks every year, Kem. So that's what happened. You'll be seeing me much more now. JKHY. Jack Henry and Associates. What do these guys do? I go to the same place every year. Montenegro and Albania. It's where my family's from. You guys will be hearing much more of Montenegro and Albania in the coming years. Mark my words. Those places are going to be huge tourist spots in about 5 to 10 years. What do these guys do? Connect people and financial institutions through technology solutions and payment processing services. Okay. Next time, come to Greece. You know, the thing is, I'm in North Albania or South Montenegro, so the trip is very far, Catherine. It's like easily a 10-hour drive. To just go to Corfu, like, area, it's like a 10-hour drive. I know Corfu, I'm saying Corfu even though it's an island, but whatever that first town is after Ksamil, Albania, it's tough. Oh, Corfu is not just the island, it spans also mainland? Oh, I see what you mean. Okay, WYY, no problem. We'll make WYY the last one tonight. Alright, Jack Henry, man, this seems it probably trades at, 12 to 15 times earnings? Oh, wow, 25 times earnings. That's a little pricey. What are the margins on this? Yeah, Corfu's not bad. I was in Corfu waters, but I didn't actually, take the boat into Corfu. I'm tempted. I'm always tempted to short Palantir again, man. I'm always tempted, but market's crazy what they're, pricing them at right now, if you ask me. Hassan, WYY is on our list. The benefit Robinhood gives, pretty much nice user interface, man. That's pretty much it. I'm not a charter holder. No, I'm not. I did pass my series, but they've expired a long time ago. Okay, let's see here. Margins, 44%. 25 times earnings is a little. For 5% growth, earnings per share growth, single digits, it looks a little expensive to me right now. A little expensive. Sloth, I'm going to say no. I'm going to say no. Let's take a look at Iron's numbers here. But, Fosky, another thing about Robinhood that's pretty cool, they have some nice, you can call them money market CDs type thing where you do make some decent return on your cash, sitting there. I do like J&J. Open Door, I don't like the business model. BBAI, I don't like. TMC is very interesting to me. I need to do more research on it though, but it does interest me. I started looking into it a little deeper, but I don't have a conclusion on it just yet. Iron, man, yeah, 19 times EBITDA here. Earnings per share is expected to skyrocket next year to 11 times multiple. Interesting. Enterprise value here. Let's take a look at the that's fine, Jay. 180 million in cash, 320 million in debt. Dirta, I was part of it a long time ago, man. I was part of actually an analyst rotational program way back in 2015. Curious your thoughts on oil next 6 months and how companies will react. So there's so many variables here, man. Daniel, first things first, what are we talking about here with regard to geopolitical risks? Do we see any kind of tension increasing or decreasing? with regards to Russia, Ukraine, Israel, Palestine. That's a big factor. How do we talk about here? OPEC cutting production. That's another thing that could impact oil. I right now I'm a bigger fan of nat gas right now. No, I didn't get to WYY yet. How do you think market will go for the rest of the year? I'm expecting flat to slightly red, believe it or not, Chem. Flat to slightly red. I think the market's priced fairly well right now. Yeah, and I think it's already pricing a decent amount of rate cuts. They are, Dan. They are. And then you also have to ask yourself, is the economy slowing in America? If so, how does that affect demand, right? Novo, I'm a fan of Novo a little bit more so now after seeing Eli Lilly's oral numbers. I thought they'd be a little bit better. Yeah, Iron doesn't look bad, man. If that earnings per share growth is true, Iron does not look bad. Tesla, I'm not a fan of. I just don't have the same. I don't share the same enthusiasm on their autonomous efforts. I think Ethereum is going to cross 5,000. Nice, Alex. I think I can see Ethereum over 5,000. With regard, it looks like you want charts on WYY, Wide Point Corporation. You have support here on WYY at 383. You really want to see that hold. You got 407 as a major resistance level and 431. This chart gets really fun if it can break 431, because if it can, the next big resistance after that is pretty much 437 and 467. But honestly, I would argue that 678 could be in play if it does happen to break 431. Iron's chart, and I'm not really a chart guy, guys. Iron looks clear to 2213 right now, Fibonacci level. Great bounce off the 1721 to the penny. Good bounce off the 20-day moving average. You got a little bit of resistance at 2044, but really the big number you want to watch is 2213, okay? Right now, this is trading view. I use quadruple moving averages, 20, 50, 100, 200-day moving averages, as well as Fibonacci levels. It really does look primed. This looks like a breakout. 2213 looks very, very possible. Are we day trading? No, I don't day trade at all. My average holding is 5+ years, but someone asked me to pull up a chart, so here it is. Even though I care much more about modeling and long-term investing. All right. As it relates to Note, let's see the financials behind Note. Oh man, this thing is bleeding bad. The numbers look all right. No earnings per share expected. Modest growth next year of 6%. Decent EBITDA multiple. They'll probably have to do a reverse split soon to stay on the exchange. I don't really like what I see here, to be honest. $38 million in cash, $141 million in debt, so not the prettiest balance sheet. And cash flow, all right, not bad. $15 million in cash flow burn in the last 12 months. So they have maybe like 2 years of cash on hand. When's this AI bubble popping? Yeah, I think it will be in little pockets. I don't think maybe across the board, but I think in little pockets. When, dude? Your guess is as good as mine. OCI, I do like Nubank. That's some really good numbers. I don't like Fiscal Note, though. And A-Lit. Let's see this one here, guys. Because I just hit the 2 hour and 30-minute mark, and I'm getting freaking tired, guys. Oof, this one just fell off a cliff. I do like VRT, Preston. Very little growth here. 3% expected next year after flat growth this year. 4% the year after that. Modest multiples. Modest earnings per share. What's the catalyst? What is the catalyst? Nick, I'm not too familiar with NWM, but I do like Freeport. Yeah, Palantir was a wild ride, for sure. But anytime I see names like this with modest growth, like no growth, down 44% year to date, what's the catalyst to turn this around? Yeah, Newmont. I don't follow Newmont too much. AMD, I still do like AMD. Juan, thank you for the follow. Oklo, I spoke about earlier on stream. I'm just struggling with the valuation and the path to profitability. It's if you're gonna invest in a name like this, you really have to have a long-term mentality because you're not seeing any real revenue until 2030 of 250 million. And then yes, it does scale hard there, but you have to be pretty patient on this name. You're likely not seeing any earnings per share until what? Analysts expect 2030. Yeah, Fosk. If he leans more dovish and more towards a rate cut on Friday, I think we could see a rally. Just because I think the market's been selling off his hawkishness ahead of it. So yeah, I could. Merck, I just don't really like their drug pipeline too much. Nick, great seeing you, man. Anytime, bro. Anytime for the book recommendations. No problem at all. TSLX, ICHR, iCore Holdings. You're getting some decent growth here at iCore. 12% this year on revenue, 5% after that, 13 times EBITDA with good health. Strong earnings per share growth. My goodness, triple-digit percentage growth. 15 times next year's earnings. I don't know anything about this company. Why is it down 48% on such good numbers, it seems? Anytime you guys see a stock down that much, really investigate. Don't be so quick to buy a dip. First, ask yourself, why is it dipping and what am I missing here? All right, guys, I really want to wrap this stream up. CCO. Camco. Oh, no, not Camco. That's on the TSX. Clear Channel Outdoor. DC, I would agree with you to an extent, yeah. Jay, the meeting is September 17th. CCO, 5% growth expected for the next several years. Same thing for EBITDA, 14 times EBITDA. No earnings per share, though, which is odd. CCJ, I do like. I do like CCJ, although I would rather go with a just uranium ETF and own the whole basket. I am not investing in UNH for like the millionth time tonight, just because I just too in the dark with regard to legislation around healthcare. Jay, please, I hate to repeat myself, man. The meeting is September 17th, man. Please. I've been talking nonstop here for 2.5 hours tonight. I really don't want to have to repeat myself too much. I apologize for putting it that way. But what are my top 5 names for the long term? Guys, the only way you will ever know is if you join Cube. All right? You got to join one of the plans to see all my holdings, get all my research, all my models. There's no contracts, there's no cancellation fees, nothing like that. But again, prices are going up after Labor Day. So if you want to lock in lower prices, just subscribe before Labor Day. Give it a shot. All the plans come with a 2-hour meeting where we discuss my names. I walk through them in depth. You can join by just going to my TikTok page, right? If you go to my TikTok, you see it like this. My website link is right here, CubeWealth.com. And you can check out my plans and give them a look-see. All of them come with a 2-hour meeting. You get all of my models, all of my research reports, how my portfolio is performing. I'm up 37% this year. You get my newsletters, my webinars, my investment guides, you name it. So all of that's there. Just at a minimum, try it for a month. If you don't like it, we part ways. But I've been doing this full-time for 8 years. Most people stay for a very long time. So I love to build that relationship with you guys. Again, that's the only way you're going to see my holdings that I'm super, super excited about. And again, the lowest plan starts at $40 a month, guys. If you want to start with that one and upgrade, that's what a lot of people do. You can absolutely do that. And this way you lock in the lower prices because, again, they are going up after Labor Day. I haven't increased prices in a long time. And trust me, I'm feeling the inflation too. And I just know that the value I'm providing is through the roof. So, guys, give that a look-see. If you're not ready for that yet, no problem. What I encourage you to do at a minimum is please join my free weekly newsletter. I write it every Monday morning at 8:30 a.m. Eastern Time just to give you a nice breakdown of what's going on with the markets. I will be covering on next week's newsletter what happens on Friday. The meeting on Friday, it's a Jackson Hole Summit. Powell's going to talk for maybe 15 to 20 minutes or so, and we're just looking to see if he's going to lean a little bit more hawkish. Is he going to pour water on future rate cut, expectations? Is he gonna fuel it? That is why I think the market's been red so far about this week. Why the market's been red? I think there's jitters going into this meeting. He's going to talk about the economy. He's going to talk about where he thinks the market is right now, and stuff like that. He's not gonna definitively say, are they cutting, are they hiking? He's not gonna do anything like that. This is on Friday morning, guys. Okay, and this is what I was trying to tell you guys why my newsletter is so important. See, look, in my newsletter, I also put a calendar, and you would know right here on Friday at 10 a.m. Eastern Time, Fed Powell speaks. This is why I encourage you guys, please. I work really, really hard, guys, to provide you guys content. I do a good amount of stuff for free. Yes, I have thought about opening my own fund. A lot of my clients have asked me to open up my own fund. That is probably part of my 5-year business plan. I've been running the Cube business, which is a subscription-based model focused on high-quality research and models that people love to get. That has been in the works now. I've been doing it for 8 years full-time. After I probably hit my 10-year mark and I've proven myself and I've built a brand, that will likely be the next stage of my business. So, guys, I hope to see you part of the subscription platform. Again, I'd love to show you guys all my names that have pushed my portfolio to all-time highs and names I'm still excited about. I'd love to, just be a third-party perspective and kind of grill your portfolio a little bit, have you thinking about things, but just play devil's advocate with your portfolio as well. I'd love to introduce you to everyone in the group chat, see my models, see all that kind of stuff. Brother, I do not trade. If you are a trader, I am not the guy for you. I am a long-term investor. My average holding is 5+ years. I don't believe trading is the way to play the market. I believe buying and holding quality companies, diversifying your portfolio, and sticking it out and thinking in decades is the best way to make money in the market. That's how I do it. That's how I've helped currently 200+ people doing it. So guys, give it a look-see. At the minimum, throw the page a follow. My goal is to go live at least once a week. I will try to up that to 2 times a week as we head into the fall and winter months. And then at least join the free weekly newsletter. And then if you do want to see all of the names I'm super excited about and all the content, the research reports like this one here on Deckers, it's my equity research reports that I put out. You get access to the whole library. My models, like as you can see here, this is my Deckers model that goes alongside my research reports. I have so many models. They come with price targets under bear, base, and bull case scenarios. All the models are right here on the Google Drive you have access to. Again, the group chat, my annual outlooks that are 150 pages long, and again, access to all my holdings and things like that. So guys, I want to thank you so much for tuning in tonight. I am just under 3 hours live. Appreciate you all so much for tuning in. If you have any questions, if you guys would like to see some sample content before subscribing, shoot me a DM. I will gladly send it your way. I'll include some models. I'll include some reports. I'll give you some more insight and information on the plans. So guys, thank you so much. Catherine, I do not have specific days I go live because I have subscribers book meetings on my calendar at random times. For example, I want to go live last Wednesday. I had 6 back-to-back meetings, so I couldn't go live. Unfortunately for you guys, my subscribers come first. But at a minimum, I will try to go live once a week. It'll probably be somewhere around Monday through Wednesday. Because if I do want to stream twice, then the next stream will probably be sometime around, Friday, Saturday, or Sunday. So guys, again, appreciate you all so much. I hope you guys found value in the stream. And I do look forward to seeing you as a Cube member so we could further our relationship and so I can take a look at your portfolio and so you can take a look at mine because I'm really excited about future technologies and where things are going. So everyone, have a good night. Good luck with the markets. I hope you guys handle the volatility well. We'll catch each other soon, all right? Take care, everyone.